effectiveness in the trial. And President Trump's administration is likely to accept a luxury Boeing 747-800 jumbo jet from Qatar's royal family, according to ABC News. It would be the most valuable gift ever received from a foreign government. Even the Statue of Liberty? I guess it's expensive in today's dollars. The super luxury jet is to be used as Air Force One. The donation of the aircraft would be legally permissible as long as its ownership is transferred to Trump's presidential library before the end of his term. The gift is expected to be announced this week when Trump visits the Middle East. Katie?
All right, let's get back to this morning's top story, and that is that the U.S. and China have agreed to slash tariffs for 90 days in an effort to work towards a broader agreement. Here with more is Bloomberg's Brendan Murray, who heads up our global trade coverage. Brendan, so the U.S. tariffs on China dropping from 145% to 30%. Chinese duties on U.S. goods will drop to 10%. Specific levels aside, it seems undeniable that the direction of travel here is positive.
Yeah, absolutely. This was a big step forward in ratcheting down the trade tensions that had gotten pretty high recently. Remember, China just a few days ago said, we're not going to have any conversations with you unless you take those tariffs down. So that condition seems to have been met during these weekend talks in Geneva. They've also announced that Treasury Secretary Bessent and USTR Jamieson Greer are going to be the point people on this. So China has some clarity now on who they're dealing with in these talks going forward. That said, 90 days is a very short period of time to negotiate big trade issues, and so the clock is ticking, and it expires in mid-August, which happens to be the peak season for shipping. So we could have some disruptions to global trade as American importers and Chinese exporters try to race ahead to get ahead of that mid-August deadline and bog things down at ports potentially on the West Coast.
Brendan, you've been our trade czar, I believe, since the first term, right? Since the first U.S.-China trade war. How does 30 and 10 look compared to historical, recent historical tariffs between China and the U.S.?
Yeah, they're still pretty high. And if you add the sectoral tariffs from the first Trump administration to the 30%, they're still pretty high tariffs, and a lot of companies won't be able to do business at this level. But as the International Chamber of Commerce said today, these are more commercially viable at this level. They're not low by any means, but they're certainly better than the 100+% that the companies were facing last week. These now will kick in on Wednesday, and so we'll see how the effect on trade. The other issue is whether the tariffs will remain, or could they be raised again if talks go nowhere? Could they go higher? That cloud of uncertainty has just extended several months longer.
Well, Brendan, given your tenure as our trade czar, let's go back to 2018, because in 2018 you had the U.S. and China agree to put their trade dispute on hold, basically, but then you had the U.S. back away from that deal. There were 18 more months of further tariffs, and then we finally got the Phase 1 trade deal in January 2020. Do you think we could see something similar play out in this scenario?
Yeah, that's the perfect example of the kind of thing that they could try to negotiate again, but it takes a long time. You have a lot of fine print to go through. You have a lot of back and forth with lobbyists to make sure that you're doing the right thing by your own industries. So Secretary Bessent did mention purchases by China, which were a central part of the Phase 1 trade deal that was negotiated. But 3 months, again, is a very short period of time to put something like that together. A more likely scenario is that they will focus on the fentanyl tariffs. That's the 20%. That's part of the 30% of the U.S. tariffs. They could focus on that. China could try to make some progress in that area, convince the U.S. that they're doing all they can to crack down on fentanyl exports, the materials to make fentanyl, and that could become a chip in the 90-day negotiations.
All right, Brendan, great to have your perspective as our global trade czar. Bloomberg's Brendan Murray there out of London. Katie?
Meanwhile, you can see this news really working its way through the pre-market.
It's pretty incredible. I mean, it just doesn't. I don't know if it's me, like I haven't had enough caffeine today. I don't feel like we're looking at a 3-4% rally in futures.
You might have a case of the Mondays, because if we hold at these gains, it'll be the biggest rally for the S&P 500 for one day since we saw President Trump come through with that 90-day pause on overall tariffs earlier in April. But it's big tech that's leading this rally. Of course, the NASDAQ 100 is still lower year to date than the S&P 500, so bouncing back to a greater degree. But it's the small caps that are in charge right now. We'll see also if that one is sustainable as well. And coming up, Lori Calvasina, she is RBC Capital Markets head of U.S. equity strategy. We'll walk through all the action with her next. This is Open Interest.
Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, is emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
To the minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Luanda, Angola, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Well, U.S. futures are surging on the back of positive news out of the U.S. and China from this weekend in Switzerland. Lori Calvasina, in her latest note, writes, trade war de-escalation can serve as the next catalyst for now, but we think the secondary impacts of recent policy disruption still ultimately matter to the stock market. I'm pleased to say that Lori joins us now. Great to see you in person.
Thanks for having me.
So give us some context here, because right now it seems like a close your eyes and buy sort of situation, but talk us through some of the recent policy disruptions that you think still matter here.
So look, you know, we've all been focused on tariffs, and my team, we read through earnings transcripts every week, and we kind of at the end of every week write up a tally of what we read and what we learned, and it's kind of been the same stuff on tariffs, right? Mitigation, pricing, maybe changing to quarterly guidance. But that story, you know, seems pretty clear at this point. What we've noticed the last couple weeks, if we've gotten some distance from the industrials and we've started to hear from a bigger mix of companies, we've been hearing about the funding freezes. We've been hearing a little bit about Doge. You know, early on there was even, you know, one of the publishing companies that was talking about some skittishness among school districts because of Department of Education issues. And if you look at actually the layoffs on the Challenger data, what we saw earlier this year was that big spike in layoff announcements was actually pretty consistent with what we see in recessions. And it's not clear clear to me that you would have seen all that show up in the data yet. So we do think this summer we're still going to be seeing some reverberations from all of that. I'm really excited, to be honest, that we have a bunch of retailers coming out over the next few weeks, because I've been telling people all morning, it doesn't matter what I think about this tariff announcement. And to be honest, I'm happy for the markets to celebrate, right? I think this, in my mind, was a big win. But I do want to hear how some of these retailers are going to navigate around this, because the reality is the tariffs are still higher than what we had a few months ago. There's still issues to be worked around, and we need to sort of really understand, has the uncertainty been alleviated enough in the eyes of corporate America? Because if it hasn't, then we do worry about them pulling the layoff lever down the road.
Well, nobody's worried about uncertainty lacking from this administration's next 3.5 years, right? So my question is this the best case scenario? Like, if it's close your eyes and buy into the cash trade, do we then sell? Because we've gotten to the best we're going to see for this year.
So what I will tell you is the setup is different for different parts of the market. If we look at the small caps, they went down to 12.65 times on April 8th, which is within the range of a recession-type PE multiple. Way below average. 12.65 times on April 8th. And 11 to 13 since the 1991 recession, when we've bottomed out on the Russell PE, that's been about, kind of that 11 to 13 range, whether it's a recession or not. If I look at a similar metric on the S&P, I forget the exact number, but it was like we fell to like maybe 17, 16 and change, way above the average, which is a little above 15. And so we didn't, and there I'm talking about kind of more of an equal weighted, kind of look at the individual
So the
stocks.
S&P 500 historical average is like 15, 16.
Yeah, and we just never really got to, like, definitely we saw valuations come off the boil, right? Like, they improved a ton, even when you kick out the top 10 market cap names, kind of that Mag 7 plus trade. But we never got to a cheap valuation point, right? And so, I think it's a little bit challenging. If you look at what we saw priced in on the April 8th lows in terms of just price decline, which is probably a better gauge for that market, we had a growth scare. We had a recession near miss, kind of that 20%-ish type move. A recession pricing would be much lower. So I can sort of look at small caps, and I feel like they priced in some significant pain. I don't quite see the same degree of pain that was priced in the large cap space.
All right, Laura, you are sticking with us through the opening bell, and here's the setup as we head to break. You can see the S&P 500 roaring higher. Those relatively cheap small caps leading the charge right now. The Russell 2000 up 4.3%. Stick with us. This is Open Interest.
In this facility, which is part of your $2 billion investment in the last 2 years, it's a massive amount.
Yes, because, we've focused a lot on automation and upgrading our quality standards so that we can adhere to the US FDA and European standards, because some of our vaccines now are going even to the West, which is a fundamental shift in our strategy, from back in the day when my father started the business, where we were predominantly in India and the developing
India-centric, now you're more global.
Yes.
So you're about 8,000 strong in this facility? All Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on site.
Serum started with just producing vaccine for tetanus, but it's producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that. Not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5, 2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched, and we're going to scale that up as well.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
All right, we are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at massive gains in futures. I mean, more than 3% on the S&P right now. The NASDAQ futures up 4%. And as we've been noting, the small caps doing even better. So right now, a little bit more than 4% there. We hear the opening bells. Douglas Dynamics, Plow, ringing the opening bell at the New York Stock Exchange. And down at the NASDAQ market site, you have Palvella Therapeutics, which... Okay, the stock hasn't done great, but maybe today's the day, right? Because all tide should be, a rising tide should lift all boats except for drug makers.
Except for drug makers, yeah. So we'll see how Palvella turns out and all of that. I do have some good news, though, and that's what's happening with the Magnificent Seven tech stocks right now. You can see Tesla, Amazon, Apple, Meta, all some of the stocks that are rallying in a big way right now. The really narrative here is just that this is a risk-on rally. These are some of the stocks that have been most beaten up over the past couple of weeks, and as such, it's some of the fiercest rebounders right now. It's going to be really interesting to see how sustainable this bid is, Matt.
All right, well, let's get to the pharma stocks that you mentioned. For the most part, they're getting hit very hard as President Trump is expected any moment now to sign an executive order to drastically cut U.S. prescription drug costs. He wants Americans to pay the same low prices as other countries. Pharmaceutical manufacturers want Americans to continue to pay way more than anybody else in the entire world for the drugs that we buy. We're awaiting that EO signing from President Trump. You can see there, we're going to go to the White House in just a moment, scheduled to do that at 9:30 with the Health and Human Services Secretary. That's not him, at the White House, and we'll bring it to you live as soon as it happens. For more, let's go to Bloomberg's Tyler Kendall. She's standing by right outside 1600 Pennsylvania Avenue. So, Tyler, what do we expect from President Trump?
Yeah, hey, Matt, so you outlined some of it there. We are expecting President Trump to sign some executive orders that would mandate that the U.S. pays the lowest price for a pharmaceutical that any other country pays. He says this would amount to most favored nation status, often used in trade deals. It appears evident that this White House is going to invoke allegations of unfair and discriminatory trade practices in order to spur some negotiations on. And a White House official tells us that they are expecting these drug makers to negotiate immediately, that one of the big focuses here is going to be on weight loss drugs, but they also described this order as being broadly sweeping. We do know that the HHS Secretary Robert F. Kennedy Jr. will be there in the room as well, and this White House official says that HHS is going to push for some more direct sales to the consumer when it comes to pharmaceutical drugs. We should also note that we are expecting the FTC and the DOJ to take a bigger stance when it comes to cracking down on anti-competitive practices when it comes to the pharmaceutical industry. So that's some of the enforcement action that we could expect out of this. And just lastly, Matt, I would add, this is completely separate from the Section 232 investigation that this administration has started into the pharmaceutical industry that we are expecting to yield some sector-specific tariffs when it comes to pharmaceuticals in the weeks ahead.
All right, Tyler, thanks very much. Tyler Kendall there at the White House. We'll go back as soon as President Trump shows up on camera to sign those executive orders. Lori Calvasina of RBC Capital Markets is still with us. And Lori, the drug story is a big one, but obviously the de-escalation between the U.S. and China is the major story. We have been seeing so many companies, other than, AI, Mag 7 tech stocks, stop CapEx and instead say they're going to buy back shares. Do you expect that to continue amidst this uncertainty?
Well, what we found is that ISM new orders tends to be a leading indicator by about a year for actual S&P 500 CapEx trends. Now, the broader S&P has actually had some pretty good CapEx trends if you look at the preliminary data through 1Q, but we actually put this in our weekly today. Like, we went through and looked at like all the sectors and looked at small cap and large cap and mid cap, and what we found is basically the only sleeve that's seeing strong CapEx is the top 10 market cap names in the S&P 500, which is the AI trade. Everyone else has been weak, but the weakness we've continued to see in that ISM new orders would portend that we would, have a few more quarters at least of weak CapEx. So I think it makes sense. And I will say on the buybacks, when I've been doing my earnings model on the S&P, what I've noticed the last couple quarters is we haven't been getting share count reduction. And I haven't, understood exactly what was going on, but I know in that last quarter, I think it was actually 1Q, we actually saw a growth in the share count by about 1%, a little less than that. So it may just be there's some pent-up demand for the buybacks as well.
I also want to get your thoughts on the cross-asset picture right now, because it's hard to not notice amid this big rally that we're seeing in the stock market, what is going on in the bond market. You look at the 10-year Treasury yield up about 8 basis points right now. You have the 2-year yield up even more as people recalibrate their Fed rate cut bets. But when it comes to your 10-year yield at 4.5%, I mean, what does that mean for corporations if we continue to bounce along in this range?
So what we've done historically, or what we've seen historically when we've looked at like different flavors of interest rates against the effective interest rates that companies are actually paying, it's less about the Fed funds. You see more of a correlation with 10-year yields. And I'll tell you, when I did my last recalibration on my earnings model, so this was before this last reporting season, we took our number down to, I forget where we were before, maybe like 264. We took it down to 258. One of the things offsetting some of our kind of weaker GDP assumptions, margin cuts that we put in, was a better interest expense environment, and we had basically 10-year yield around 4% and a couple cuts from the Fed. So that was a sort of a tailwind we saw directly coming in, and if we have to rejigger things at some point, right, you have to sort of look at 4.5% and say, what does that do? I will tell you, when I've done my cross asset model, just a very simple earnings yield gap analysis, the problem for the stock market purely on a price return basis looking forward tends to be when that 10-year yield approaches 5%, and so we haven't done that. But if you look back at some of these pullbacks we've had in recent years, some of those have been associated with kind of that march towards 5%. So I would say 4.5, not great, doesn't worry me a ton.
Interesting, but 5%. I mean, if you
5%.
Put in that tail risk, I mean, how big of a worry is that?
It's a worry, because of, the earnings impact, because of what that cross-asset model would probably signal. When we had, pre-tariff, when we had done some back testing, it suggested that when we hit 5% on the 10-year Treasury yield, if you kept the earnings yield constant, it would flip you into a negative range for stocks. But I would say the bigger issue as well, right, is if you sort of hit 5% and start to move above that, people, all around the street are going to say we're not in sort of this flat, choppy interest rate environment anymore, right? It looks more on the chart like you may be breaking out. And I think that kind of idea that we're going from flat, choppy to maybe a structurally rising rate environment could be, challenging for people.
Especially the U.S. government with this much debt on its books, right?
And look, I just want to be clear, that's all like our stress testing, scenario analysis. That's not what we're anticipating, but, we do kind of keep coming back to that 5% number.
I want to ask you about something you've talked about a lot, which is if we get growth between 0 and 1%, that's worse than contraction even, right?
Yeah, if you just look at the historical backtest data, and I've been using this study since like 08, 09, like in the financial crisis. I used to be a small cap strategist, and so we had this GDP test we developed, and works for the S&P 500 as well. And if you just look at GDP in different ranges and look at what stocks did during that actual year, negative GDP, as long as it's a final down GDP, stocks tend to rise because you discount the problems in advance. When you're sitting in that 0 to 1 or 1 to 2% range, it's not always true, but more often than not, you're down than up in the stock market. And it's a worse hit rate if you're in the 0 to 1 than a 1 to 2, but both are not great. You really need to be above 2 to kind of have a positive return environment for stocks. And I think the reason why is, if I just look back over the history of my career, whenever you're sort of sitting at that really weak GDP, it's that constant fear of tipping into the abyss. Right. And it's that fear of tipping, and it's that anticipation that tends to take stocks down, as opposed, once you're there, people who have been around long enough know it's a buying opportunity.
Lori, we have less than a minute left, but I think that is so fascinating. And I wonder how the Fed factors into that, because I imagine if you have negative GDP, you know that the Fed is going to be cutting rates, whereas if it's just sort of, sluggish to bad, but still positive, it's not as much of a guarantee.
Yeah, and look, I think they're in a tricky spot right now, right? And we really leave the Fed calls to our rates team and our economics team. I know that they're looking for cuts to start later this year, and, it really does depend on what the data shows, and they think, kind of the risk of that data, turning negative at some point is still there. I think it'll be interesting to sort of see how the inflation backdrop plays into everything, because they have a very tricky dual mandate right now, but they are watching the data, and I think that's the appropriate thing to do.
All right, Lori, great having you on the program. Thanks so much for joining us. Lori Calvasina there from RBC Capital Markets. Let's get a look at some of the other stocks on the move this morning. For that, we go to Bloomberg's Nora Melinda. Nora, what do you got?
Matt, I'm seeing green all across the board this morning. Of course, we're seeing Wall Street seeing a relief rally, a broad-based relief rally, as people are really exhaling after we got this news today that U.S. was cutting its levies on China from 145% to 30%, with China cutting its tariffs on the U.S. to 10% from 125%. But we're really seeing big tech companies, we're seeing chip makers, semiconductors, all rallying off of this news. Of course, we're seeing a lot of these companies that do a lot of their manufacturing in China, so this is great news for them. But also in the consumer space, we're seeing names like Nike, we're seeing Starbucks, we're seeing Amazon, we're seeing all these companies really rallying, as it really gives a bit of a tailwind here for the market. Lastly, I'm looking at travel and leisure companies. Now we're seeing Delta, we're also seeing American United, Carnival, a lot of these names really just rallying in sympathy off of this news today. Lots to see that is in the green today, Matt.
All right, Nora, thank you for that. It's Bloomberg's Nora Melinda with a great roundup of some of the biggest movers at the opening bell. And coming up, as we've been mentioning, President Donald Trump's vows to cut U.S. drug prices by up to 80%, hitting pharma stocks. We'll discuss next with pharma analyst Emily Field of Barclays. This is Open Interest.
Let's cut right to it. This is Bloomberg's new show, Primer. Technology is a $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets?
not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Welcome back to Open Interest. Let's check in on this rally right now because you have the S&P higher by 2.5%. That's a little bit lower than where we were pre-market, but still a really robust start to this trading week. Coming out of this weekend, you have big tech really leading the charge when it comes to your big indexes. When it comes to the small guys, they're also in the green in a big way. The Russell 2000 up by nearly 4%. We'll see how sustainable that is. But it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Marriott and Hilton both getting upgraded over at Jefferies. The analyst says that the companies are set to grow through the uncertain business climate. Next up, you have Target getting cut to a sell over at Bernstein. The firm says that it faces a difficult trade-off between fueling sales growth and maintaining margins, but in the risk-on rally, you can see shares up over 6%. And finally, we have Warner Music getting downgraded over at Goldman on reduced visibility. The company reported weaker subscription and ad-supported streaming growth in its latest quarter. Now, back to one of the big stories up today, and that is that President Donald Trump says that he'll mandate a cut in U.S. medicine prices that could reach 80%. The president is set to discuss his plan in just a few moments at the White House. And as we wait, we're joined now by Emily Field. She is head of European Pharma Research over at Barclays. And Emily, reading through your research, it sounds like you see some potential silver linings here for the overall industry.
Yeah, thanks for having me. So obviously, this is all kind of coming out in real time, but at least in Trump's last executive order, specifically relating to drug pricing, there were actually some things that makes pharma happy in there, which is, they talked about getting rid of this so-called pill penalty, which basically it cuts a few years off of exclusivity for small molecule drugs or pills versus infused drugs that when they're being negotiated for with the IRA. Now, we'll have to hear what they have to say today, but as the text of this seems to be going around, all of our stocks opened down hard this morning in Europe, and since many of them are now in the green. So I think people are taking at least what we've learned so far positively relative to where we were, 8 hours ago.
Hey, Emily, I'm wondering, from your perspective as someone who's covered this industry for a long time, why hasn't any other president or Congress been able to substantially lower drug prices? I've lived in other countries for many years, and I'm always shocked that I'm paying sometimes 10x the amount for drugs here than I am in other rich, developed countries like the UK and Germany. Why wasn't President Biden able to achieve this? Why wasn't President Obama able to achieve this? And do you have confidence that Trump will?
Yeah, so President Biden actually, with the Inflation Reduction Act, did introduce some component of drug price lowering via Medicare drug price negotiation, when that only happens for Medicare specifically after drugs have been on the market a number of years. Going way back to the Affordable Care Act, actually pharma was pretty much let off the hook there, and I think that really came down to that act passing, by the skin of its teeth. And this whole argument that pharma has, which is a part of this executive order we see here today, is that the U.S. does, in a way, subsidize the rest of the world paying lower prices. These are companies that have to send billions and billions in R&D. A lot of that, and even more, as we're seeing with all the tariff announcements, is going to be spent in the U.S. So is America, to a degree, subsidizing the rest of the world in the higher drug prices that they pay? There's certainly an element of truth to that, but what causes that to harmonize? We've actually seen some European chief executives, such as the CEOs of Novartis and Sanofi, write published op-eds saying, hey, maybe Europe should start paying a little bit more. So it certainly feels like on both sides of the Atlantic that this issue is not going to go away.
Well, that's exactly where I wanted to go. The narrative that the U.S. pharma industry subsidizes the rest of the world, clearly that idea has currency in this White House. And how does this potentially rework the global pharma landscape? As you mentioned, there's some folks coming out and saying, you know, maybe these European companies should step up a little bit. But in your view, how does this actually play out?
Yeah, that is such a good question because exactly to that point, we had a policy expert speak at our global healthcare conference back in March. And, you know, of this particular person's opinion who sounded pretty close to the president, he said, you know, that Trump doesn't particularly care if Americans pay less or Europeans pay more, but he thinks Americans are getting a bad deal. Now, it does look like that there's, you know, heavily in the text of this executive order, it talks about, you know, industry speaking to HHS and trying to have a constructive dialogue. So it looks like that, you know, can everybody get together and play ball in a way where everybody can save some face and have a great photo op in a few months' time? That would be a win for everybody probably. But I think this is still very, very light on details on both sides of the Atlantic in terms of what could actually, you know, in the devil's in the details, right? And a lot of this stuff, as addressed in the EO, does require a law to change in the United States. So there's a lot of words out there right now, but not a lot of specifics.
Well, you know what, Emily, I look specifically at Wegovy or Ozempic, right? And here in the U.S., Americans will pay over $1,000 a month for these drugs. Maybe if they get cut a deal, it'll be $499, which is still like a car lease, right? In the UK, in Germany, in Sweden, you're paying like $100, maybe $150 a month. What have those countries done in order to get those kind of deals, and why are we getting the short end of the stick? All right, maybe President Trump will address that. Unfortunately, Emily, I got to go straight to him. He's speaking now at the White House. Let's take a listen to the president.
Strong weekend. Before we begin, let me say a few words about the historic events that took place over the last few days. On Saturday, my administration helped broker a full and immediate ceasefire, I think a permanent one, between India and Pakistan, ending a dangerous conflict of two nations with lots of nuclear weapons. And they were going at it hot and heavy, and it was seemingly not going to stop. And I'm very proud to let you know that the leadership of India and Pakistan was unwavering, powerful, but unwavering in both cases. And having these, they really were, from the standpoint of having the strength and the wisdom and fortitude to fully know and to understand the gravity of the situation. And we helped a lot. And we helped also with trade. I said, come on, we're going to do a lot of trade with you guys. Let's stop it. Let's stop it. If you stop it, we're doing trade. If you don't stop it, we're not going to do any trade. People have never really used trade the way I used it. That I can tell you. And all of a sudden they said, I think we're going to stop. And they have. And they did it for a lot of reasons, but trade is a big one. We're going to do a lot of trade with Pakistan. We're going to do a lot of trade with India. We're negotiating with India right now. We're going to be soon negotiating with Pakistan. And we stopped the nuclear conflict. I think it could have been a bad nuclear war. Millions of people could have been killed, so I'm very proud of that. I also want to thank Vice President Vance and Secretary of State Rubio for their work and efforts. They worked very hard on that. We also, as you know, created a situation where the Houthis, for the first time ever, have ceased firing, and they've let it be known that they're not going to be firing at American ships anymore, not going to be firing at Americans anymore. This was a heavy barrage that lasted for approximately 50 days. And as you know, they've been in war essentially for forever. But over the last 10 years, they've been very difficult for other countries. Nobody was able to do what we did. But they stopped, and we take their word for it. Their surrogates and them directly said, we don't want to do this anymore. And so we were satisfied with that. In addition, yesterday we achieved a total reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue on the larger structural issues. And I want to tell you that a couple of things. First of all, that doesn't include the tariffs that are already on, that are our tariffs, and it doesn't include tariffs on cars, steel, aluminum, things such as that, or tariffs that may be imposed on pharmaceuticals, because we want to bring the pharmaceutical businesses back to the United States, and they're already starting to come back now based on tariffs. Because they don't want to pay 25, 50, or 100% tariffs, so they're moving them back to the United States. I spoke to Tim Cook this morning, and he's going to, I think, even up his numbers, $500 billion. He's going to be building a lot of plants in the United States for Apple, and we look forward to that. I really do look forward to that. But the talks in Geneva were very friendly. The relationship is very good. We're not looking to hurt China. China was being hurt very badly. They were closing up factories. They were having a lot of unrest. And they were very happy to be able to do something with us. And the relationship is very, very good. I'll speak to President Xi maybe at the end of the week. We have some other things we're doing. But one of the biggest things that we're doing, and I don't know if people realize this, but we made a great deal with China, a great trade deal, but it was a much bigger deal originally, and then they canceled it right in the last day. Some of you faces I remember were there when that happened. I remember you. And we had a deal where they opened up their country to trade with the United States, and they took that away at the last moment, and then I canceled the whole thing, and then 6 months later we ended up doing a smaller deal, but it was a big deal. It was $50 billion worth of product that they were going to purchase from our farmers, et cetera. And we agreed to that. People thought it was 15 because they were doing 15. We made it 50 because I misunderstood the 15. I thought I said, you got to get 50. Because when I asked, if you remember the story, when I asked, what are we doing with them? My Secretary of Agriculture at the time, Sonny Perdue, said, sir, it's about 15 billion and we're asking for 15. And I thought he said 50. So I said, so they came back with the deal at 15, and I said, no way, I want 50, because you said 50. They said, sir, we didn't say that anyway. Bottom line, I said, go back and ask for 50, and they gave us 50. And they were honoring the deal, and we would call them up a lot for the corn and for the wheat and for everything. They were honoring the deal, and then when Biden got in, they no longer honored the deal. There was nobody to call. I would call on an average of once every 2 weeks to say, come on, you have to speed it up a little bit. And our farmers were doing great. I said to them, buy more land and bigger tractors, if you remember. That's what happened. But the deal was a very good deal. But the best part of the deal was that we opened up China. China agreed to open itself up to American business to go in. And it would have been a great thing, I think, for China. They would be able to see things that they haven't seen. They would be able to buy products that they had never been able to buy. Would have been great for American business. I think it would have brought unity between China, better unity between China and the United States. And the bottom line is that they canceled it the last day. We were all set to sign it, and then I went a little bit angry. I got a little angry. I said, they canceled the deal. The deal was done. It was all ready to be signed, and people went over, they came back to me, sir, they don't want to sign the opening up China. Well, the biggest thing that we're discussing is the opening up China, and they've agreed to do that, but it's going to take a while to paper it. You know, that's not the easiest thing to paper. But that's the single, I think, to me, some people would disagree. Some people would say we're getting a lot of money with tariffs or whatever, but, you know, especially when you add what we already have, because remember, we're already getting the 50% on steel and different things. That's not included in these numbers, so you can add that. But the biggest thing to me is the opening up. It would be, I think it would be fantastic for our businesses if we could go in and compete with China. It would be a lot of jobs for China. It would be, I think, at a time when they can frankly use the jobs. And that's what we're talking about. So that's a very, very important element to add. So when Scott, I watched him speak the other day, and I think he didn't want to say it, but I said, it's okay to say it. Look, if we don't get it, we don't get it. But if we don't get it, it won't be a positive thing. But if we do get it, I think it's maybe the most important thing to happen. Because if you think about it, we opened up our country to China. They come, they have very few restrictions. And they didn't open their country to us. Never made sense to me. It's not fair. And they've agreed to open China, fully open China. And I think it's going to be fantastic for China. I think it's going to be fantastic for us. And I think it's going to be great for unification and peace. China will also suspend and remove all of its non-monetary barriers. They've agreed to do that. Well, they're very numerous. But again, to me, the biggest thing that came out of that meeting is they've agreed. Now we have to get it papered, but they've agreed to open up China. It's going to be great for everybody. And third, I'm very happy to announce that Idan Alexander, an American citizen who until recently most thought was no longer living, thought was dead, is going to be released in about 2 hours, actually. And he's going to be released before the eyes of Steve Witkoff, who has done a fantastic job. I know a lot of people that have a lot of talent. I know Steve, he had a lot of talent. But I know a lot of people with a lot of talent, but there's one that I thought had a special way about him, special personality, aside from being a good deal maker, had a special way about him, and it was Steve. Knew very little about the subject matter, who does? But he learned it in about 2 hours. And he's been fantastic, so I want to just thank Steve. But they're going to be releasing Idan in about 2 hours from now, or sometime today, let's say. And again, they thought he was dead just a short while ago. His parents are so happy. They're so happy. So it's, as you know, Idan's the only American citizen who's captured and held hostage by Hamas since October 7th, 2023. And he's coming home to his parents, which is really great news. I mean, to me, it's big news. They thought he was dead. So that's that. So we'll be heading there, and we'll be seeing 3 primary countries. You know all about that: Saudi Arabia, UAE, Qatar. On Thursday's meeting with Russia and Ukraine is very important. I was very insistent that that meeting take place. I think good things can come out of that meeting. Stop the bloodshed of the horrible. It's a bloodbath. But that 5,000 more, it's really much more, I'm trying to be conservative, more than 5,000 soldiers. Russian, they're not American soldiers, they're from Russia, they're from Ukraine, but they're people. They're human souls, and they're being killed at levels that we haven't seen since the Second World War. And it's every week. A lot of drone fighting. It's a whole new form of warfare, and it's violent and vicious. And so that's it. I'd like to go back to China just for a second. They're very heavy on the fentanyl. We're charging them, as you know, 20% for the fact that they send fentanyl into our country. And they've agreed that they're going to stop that. And, you know, they'll be rewarded by not having to pay, you know, hundreds of billions of dollars in tariffs. So the fentanyl should stop. It comes from China. It's amazing. And comes through our southern border, comes through our northern border too, comes through Canada, and comes through our southern border, much more through the southern border. But so that's a very important subject to me, because everybody in this room has lost friends or people that have family members that have died of fentanyl. So there's a big incentive for China to stop, and I take them at their word. They're going to work on that, I think, very hard. And one thing, when they work on something, they get it done. So now I'm about to depart on a historic visit. Some of you are going with us to, as I said, Saudi Arabia, Qatar, and United Arab Emirates. Before I do, I'll sign one of the most consequential executive orders in our country's history. I don't think there's ever been anything signed like this, certainly not with respect to health care, nothing even close. I'm delighted to be joined on this occasion by Secretary of Health and Human Services Robert F. Kennedy Jr., who is doing a really good job, I have to tell you that. CMS Administrator, a friend of mine, Dr. Mehmet Oz, who is an amazing guy. You know, I was telling Bobby before, Oz had a very successful show, but it hurt his reputation. Because when you're in show business, it hurts your reputation a little bit. It's good for you, but in terms of professionalism and being a doctor, it sort of hurts your reputation. This guy went to the best schools, was the best, I mean, top of the line. Then he did a television show, became a success, made a lot of money, all that stuff, but it sort of hurt him. And you know who I compare that to? I hate to say this, but a special woman, Jeanine Pirro. She was the toughest, smartest DA, maybe in our countries, in our cities and states, history, New York. She was really tough, really sharp. Then she did a show, and people didn't think of her quite the same way. She became more of an entertainment person, like Oz. Oz is not an entertainer. He's not really an entertainer, if you know the real story. And she isn't either. She is unbelievable. She was one of the strongest district attorneys in the history of New York, highly respected, very tough, went after the drug dealers at a level that you don't see today anymore. And you know, hopefully she's given up a tremendous, she's leaving the #1 show on cable television, one of the #1 shows on television, period, The Five, but they've got great people left behind, but she was a big part of it. And so I equated to that. Jeanine Pirro is unbelievable. FDA Commissioner Dr. Marty McCary, with a reputation that's second to none, and the job he's doing already has been fantastic. Thank you, Marty. And Director of National Institute of Health, Jay Bhattacharya, who has been, as you know, from Stanford, so highly regarded, and have all been working with us very hard on this. And the question they would ask, being a little bit new to the government aspect of it, is why doesn't somebody fight the drug price situation, meaning equalization? There's a term, it's called equalization. Nobody wants to mention that term. And I'm not knocking the drug companies. I'm really more knocking the countries than the drug companies, because they're forced to do things. But the drug lobby is the strongest lobby in this country, they say, the drug lobby. It's between that and lawyers, and they have a lot of power. But starting today, the United States will no longer subsidize the health care of foreign countries, which is what we were doing. We're subsidizing others' health care. Countries where they paid a small fraction of what, for the same drug, that what we pay many, many times more for. And we'll no longer tolerate profiteering and price gouging from Big Pharma, but again, it was really the countries that forced Big Pharma to do things that, frankly, I'm not sure they really felt comfortable doing, but they've gotten away with it, these countries. European Union has been brutal. And the drug companies actually told me stories. It was just brutal how they forced them. And European Union suing all our companies, Apple, Google, Meta, they're suing all of our companies. They end up, they have judges that are European Union-centric, and they get rewarded $15 billion, $17 billion, $20 billion, and they use that to run their operation. Not going to happen any longer, that I can tell you. So what's been happening is we've been subsidizing other countries throughout the world, not just in Europe, throughout the world. European Union was the most difficult, from what I understand. I mean, I'll tell you a story. A friend of mine who's a businessman, very, very, very top guy. Most of you would have heard of him. A highly neurotic, brilliant businessman, seriously overweight, and he takes the fat shot drug. And he called me up, and he said, President, he calls me, he used to call me Donald, now he calls me President, so that's nice respect. But he's a rough guy, smart guy, very successful, very rich. I wouldn't even know how we would know this, but because he's got comments. Said, President, could I ask you a question? What? I'm in London, and I just paid for this damn fat drug I take. I said, it's not working. He said, I just paid $88 And in New York, I pay $1,300. What the hell is going on? He said, so I checked, and it's the same box, made in the same plant, by the same company. It's the identical pill that I buy in New York. And here I'm paying $88 in London. In New York, I'm paying $1,300. Now, this is a great businessman, but he's not familiar with this crazy situation that we have. But he was stunned. But it was just one of those stories. And I brought it up with the drug companies, represented by somebody who's very, very smart, good person too. And we argued about it for about half hour. And then finally he just said, because they can't justify it, he just said, look, you got me. You got me. I can no longer they've been justifying this crap for years. They said, oh, it's research and development. Well, I said, well, research and development, other countries should pay research and development too. It's for their benefit. It was just one of those things. And the other countries would set a price, and they'd meet the price, and they'd say, if you don't meet the price, you can't sell it in our country. I said, well, then you walk away, and, they'll call you back, and they'll sell it in the country. But now they'll have to do that. So for the first time in many years, we'll slash the cost of prescription drugs, and we will bring fairness to America. Drug prices will come down by much more, really, if you think 59. If you think of a drug that is sometimes 10 times more expensive, it's much more than the 59%. It depends on the way you want to analyze it, but in one way you could analyze it that way. But between 59 and 80, and I guess even 90%. So when I worked so hard in the first term, and if I got prices down, remember I was the only one to ever get prices down for a full year, but I'd get them down like 2%, and I thought it was like a big deal. Well, we're getting them down 60, 70, 80, 90%, but actually more than that if you think about it in the way mathematically. And Pharma has to say, we're sorry, but we'll not be able to do this any longer to these countries that have been so tough. They've been very tough, nasty. It's trade. It's trade. And pharma is also very powerful. And the Democrats have protected pharma. The Democrats, this is the Democrats have protected pharma. These are the Democrats. And by the way, I just called the Speaker of the House, and I just called the leader, our leader in the Senate, John Thune, Mike Johnson. Spoke to both of them. I said, when you score, you're going to have to score two things. You're going to have to, number one, score that hundreds of billions of dollars of tariff money is coming in. But even bigger than that, you're going to have to score that your cost for Medicaid and Medicare and just basically pharmaceuticals and drugs is going down at a level that nobody has ever seen before. It'll pay for the Golden Dome. I see the Golden Dome is there, see? That'll easily pay for the Golden Dome. And we'll have a lot of money left over. We need the Golden Dome, by the way, in this world. Although this world's a lot safer today than it was a week ago, and a lot safer than it was 6 months ago. We had people that had no clue what they were doing. So today, Americans spend 70% more for prescription drugs than we spent in the year 2000. Think of that. Our country has the highest drug prices anywhere in the world by sometimes a factor of 5, 6, 7, 8 times. It's not like they're slightly higher. They're 6, 7, 8 times. There are even cases of 10 times higher. So that you go 10 times more expensive for the same drug, that's big numbers. Even though the United States is home to only 4% of the world's population, pharmaceutical companies make more than 2/3 of their profits in America. So think of that. With 4% of the population, the pharmaceutical companies make most of their money, most of their profits from America. That's not a good thing. Now, I think, by the way, I have great respect for these companies and for the people that run them. I really do. And I think they did one of the greatest jobs in history for their company, convincing people for many years that this was a fair system. And nobody really understood why, but I figured it out. For years, pharmaceutical and drug companies have said that research and development costs were what they are, and for no reason whatsoever, they had to be borne by America alone. Not anymore, they don't. This means American patients were effectively subsidizing socialist healthcare systems in Germany, in all parts of the European Union. They were the toughest of all. They were nasty. And I see that. I see that with trade, too. European Union is, in many ways, nastier than China, okay? And we've just started with them. Oh, they'll come down a lot. You watch. We have all the cards. They treated us very unfairly. They sell us 13 million cars. We sell them none. They sell us their agricultural products. We sell them virtually none. They don't take our products. That gives us all the cards, and very unfair. So they're going to have to pay more for health care, and we're going to have to pay less. That's all it is. And believe it or not, you know, because it's really the world we're talking about, not just the European Union, but because it's the world, the numbers are for the healthcare company not as bad as you would think. They'll make the same. I think the healthcare companies should make pretty much the same money. I really don't believe they should be affected very much, because it's just a redistribution of wealth. It's a redistribution where it could be the same top line, but it's going to be distributed differently. Europe's going to have to pay a little bit more. The rest of the world's going to have to pay a little bit more, and America's going to pay a lot less. Again, because it's a much smaller population than when you think of the whole world. So basically what we're doing is equalizing. There's a new word that I came up with, which I think is probably the best word. We're going to equalize, where we're all going to pay the same. We're going to pay what Europe's going to pay. We're going to all pay. Now, there may be some countries in dire need, and I would be willing to sacrifice that, but and help them. But it's called most favored nation. We are going to pay the lowest price there is in the world. We will get whoever is paying the lowest price. That's the price that we're going to get. So remember that. So we're no longer paying 10 times more than another country. Whoever is paying the lowest price, we will look at that price and we will say that's the price we're going to pay. Most favored nations, that's what it is. One breast cancer drug costs Americans over $16,000 per bottle, but the same drug from the same factory, manufactured by the same company, is 1/6 that price in Australia and 1/10 that price in Sweden. 1/10 for the identical product. A common asthma drug costs almost $500 here in America, but costs less than $40 in the United Kingdom. So $40 in the United Kingdom, which is where this gentleman told me he paid a small amount for his shot. But think of that. So $40 versus $500 here. That's not even bad. There are much worse examples. And the weight loss drug, Ozempic, costs 10 times more in the United States than in the rest of the developed world. 10 times more. Why? Why? What did we do? Suckers. But we never had a president that had the courage to do this. And nobody knew the system like I do. I mean, I've gotten to know this system so well. And I don't think it's fair that it benefits Obamacare. Obamacare is a failure. It's not a good health care. It works. I made it work. I had an obligation to make it work, or an obligation to let it die. I chose that we had to make it work. I had to make it as good as possible. And I had a choice. I could have let it fail or make it as good as possible. As good as possible means it was still not very good, but it survived. And we did the right thing. But this makes everything work. And I don't want to have a bad form of health care work because of the fact I was able to cut drug prices by 80 or 90%. So we're going to maybe come up with something. I think this gives the Republicans a chance to actually do a health care that's much better than Obamacare and for less money, which if you guys would work on that along with Congress. But I do want to say that Democrats could have done this a long time ago. They have fought like hell for the drug companies, and they knew they were doing the wrong thing. And it's going to be very hard. I was just telling the leader and the speaker that it's going to be very hard for the Democrats to vote against the one big, beautiful deal. the greatest tax cuts in history, greatest everything, but now you have the big drug prices because that's going to be included. It makes that whole situation different from a scoring standpoint. I just told them, I called them up about this. I said, I'm going to do something that's going to be very monumental, and you're going to be scoring. You better tell your people that this is going to score really well. And then add hundreds of billions of dollars in tariffs to your list also. But as big as the tariffs are, this is something that really hits quickly. 5 years ago, I signed an executive order to confront this disaster, but only confront it in a minor way. It was a good confrontation, but never to this extent. It took people a little while to understand a very complicated system. But Joe Biden, without any knowledge of what he was doing, terminated the policy and then pretended to negotiate under a new system. And then you take a look, 5 out of the 10 drugs that he negotiated are now over 200% more expensive in America than the rest of the world, and far more expensive than when he even got involved. Much more expensive than when he got involved. Joe Biden's plan was as you know, because you wrote about it, you don't say it very loudly, but it was a very big failure, was his whole presidency. First, I'm directing the U.S. trade representatives and Department of Commerce to begin investigations into foreign nations that extort drug companies by blocking their products unless they accept bottom line and very low dollar amounts for their product, unfairly shifting the cost burden onto American patients. And we'll be taking a look at that very strongly. The biggest thing we're going to do is we're going to tell those countries, like those represented by the European Union, that, that game is up, sorry. And if they want to get cute, then they don't have to sell cars into the United States anymore. It's a very big subject. And they won't get cute, because I'll defend the drug companies from that standpoint. They were given a price by the European unions and other countries. This is what you do. This is what we're going to pay. We're not going to pay any more. Let America pay the difference, because there was a big shortfall. Let America pay it. And that's what we did, but we're not doing it anymore. Next, my administration will secure what we're calling most favored nations drug pricing. The principle is simple. Whatever the lowest price paid for a drug in other developed countries, that is the price that Americans will pay. And we're using the term other developed countries because there are some countries that need some additional help, and that's fine. I think that's very good. Some prescription drug and pharmaceutical prices will be reduced almost immediately by 50 to 80 to 90%. Big Pharma will either abide by this principle voluntarily or will use the power of the federal government to ensure that we are paying the same price as other countries. To accelerate these price restrictions and reductions, my administration will also cut out the middlemen. We're going to totally cut out the famous middlemen. Nobody knows who they are, middlemen. I've been hearing the term for 25 years, middlemen. I don't know who they are, but they're rich. That I can tell you. We're going to cut out the middlemen and facilitate the direct sale of drugs at the most favored nation price directly to the American citizen. So we're cutting out, Bobby, the middlemen. It's so important, right? You got to do that. They're worse than the drug companies. They don't even make a product, and they make a fortune. It's very smart business people, that I can tell you. If companies make no significant progress toward most favored nation pricing, which we will insist that they do, so I think I'm wasting time talking about it. We're going to insist upon it. And we'll insist, and we're going to help the drug companies with the other nations, because those other nations do a lot of trading with us. They need our trade, just like China needed us very badly. They need us just as badly. We will do whatever we have to with trade, just like we did some great things with trade with India and Pakistan. It really helped the situation, very heated situation. Could have lost millions of people, more than millions. I mean, many millions of people. And they want to do business with America, but we never used our powers that way. We never knew how. We never had people that knew how to do that. We'll also open up America's market to safe and legal imports of affordable drugs from other countries, putting dramatic downward pressure on prices. And if necessary, we'll investigate the drug companies, and we'll, in particular, investigate the countries that are doing this, and we will add it onto the price that we charge them for doing business in America. In other words, we'll add it on to tariffs if they don't do what is right, which is everybody should equalize. Everybody should say, pay the same price. And special interests may not like this very much, but the American people will. I mean, I am doing this for the American people. I'm doing this against the most powerful lobby in the world, probably, the drug lobby, drug and pharmaceutical lobby. But it's one of the most important orders, I think, that's ever been signed, certainly with regard to health care or health in the history of our country, and it's an honor to be a part of it. And I'd like to ask Robert F. Kennedy to say a few words, please. Thank you.
Thank you, Mr. President. This is an extraordinary day. This is an issue that, you know, I grew up in the Democratic Party, and every major Democratic leader for 20 years has been making this promise to the American people. This was the fulcrum of Bernie Sanders' runs for presidency, that he was going to eliminate this discrepancy between Europe and the United States. But as it turns out, none of them were doing it. It's one of these promises that politicians make to their constituents, knowing that they'll never have to do it. And the reason they'll never have to do it is because they know that Congress is controlled in so many ways by the pharmaceutical industry. There's at least one pharmaceutical lobbyist for every congressman, every senator on Capitol Hill, and every member of the Supreme Court. By some estimates, 3. Pharmaceutical companies, the industry itself spends 3 times what the next largest lobbyist spends on lobbying. So this was an issue that people talked about, but nobody wanted to do anything because it was radioactive. They knew you couldn't get it by Congress. We now have a president who is a man of his word, who has the courage. President Trump was taking money from the pharmaceutical industry too. I think they gave you $100 million. But he can't be bought, unlike most of the politicians in this country. And he is standing here for the American people. I don't know what, you know, there's writers like Lord Elizabeth Warren or Robert Reich who are saying that President Trump is on this side of the oligarchs. There has never been a president more willing to stand up to the oligarchs than President Donald Trump. And I'm very, very proud of you, Mr. President, for your courage, I'll say, because I don't want to be crude, your intestinal fortitude, your stiff spine, and your willingness to stand up for the American people. We have 4.2% of the world's population. Our country represents 75% of the revenues for pharmaceutical companies. We spend in our country $1,126 per capita on drugs. In Britain, they spend about $240. They spend 1/5 of what we do. And this is true across Europe. And the drug companies, Europeans, if you ask them, it made no sense what they were saying. America has to pay for this innovation or it's not going to happen. What President Trump is saying to our European partners is you've got to raise the amount that you're paying for those drugs and pay for your share of the innovation. That the United States is no longer subsidizing that. If the Europeans raise the price of their drugs by just 20%, that is $10 trillion that can be spent on innovation, and the health of all people all across the globe is going to increase because we're going to have better products. So I'm just so grateful to be here today. I never thought that this would happen in my lifetime. I have a couple of kids who are Democrats, are big Bernie Sanders fans, and when I told them that this was going to happen, they had tears in their eyes because they thought this is never going to happen in our lifetime. And we finally have a president who's willing to stand up for the American people. Thank you. And Dr. Oz.
Thank you, Secretary Kennedy. This is the most powerful executive order on pharmacy pricing and healthcare ever in the history of our nation. And it's only happening because we have a president with the fortitude, the guts to stand up to the withering criticism and lobbying that's going to occur as soon as folks hear about the executive order. So On behalf of the child in Philadelphia who's got an autoimmune disease with a $1,000 a month drug, or the older woman in Los Angeles who's on a blood thinner who can't afford her copay, I want to thank President Trump. God bless you for having the guts to take on this industry. Thank you, sir.
Thank you very much.
So let's talk about the details a little bit. And this is primarily about equalization, as President Trump said. It's about fairness. Think of NATO as a metaphor. When President Trump said, you've got to pay a little more, so it makes sense for all of us, they came up. And the European countries contributed. The same thing we believe will happen in this situation. Most people who have thought about this process agree that it is patently unfair to tolerate the numbers that Secretary Kennedy and President Trump have reflected to you. On this chart to my left is a list of the 10 drugs that were negotiated in the IRA. Again, this is the bill, the law, that regulates a negotiation process. This is the best price that was able to be obtained by the Biden administration. And if you look at these numbers, they actually reflect how much on top of the most favored nation price was being paid by the United States. So the closest to me, Bob, you can point to the chart against the closest one, 289%, the one that's closest to you. That means that we are paying in America 4 times more than that drug costs in other countries. Again, 100% is the baseline. It's 289% above that baseline. It goes all the way down to when we're paying 50% more than any other country. That's the range. As was pointed out by President Trump, half the time we're paying 3 times more than is paid in other countries. It doesn't make any sense for the system. That stated, President Trump has over and over again indicated, and Secretary Kennedy reflected as well, we want innovation. We want our technology partners doing the best they can to make the best solutions for drugs that cure as many people in America and around the world as possible. By getting our allies to pay a bit more, as they should be, and they should have for many years been doing, will course correct a problem that's gotten out of hand. And by doing that in a thoughtful, effective way, we're going to be able to get the pharmaceutical industry whole. Those jobs will still be here, will still be productive, will still be curing cancer and a slew of other ailments that plague humanity. America will still be the leader in this space, but we'll be paying the appropriate amount, the right-sized amount for those tasks. So over the next 30 days, the 4 of us up here, together with people who are standing in the back of this room, we're doing a lot of the heavy lifting, are going to be approaching pharmaceutical companies to talk specifically about what we want the most favored nation price to be based on the best data we have. We're looking forward to a thoughtful interaction with these corporate leaders, many of whom we've spoken to and in quiet will agree the system is not right the way it is. They're patriotic Americans. They want what's right. But the fact that in my lifetime, as Secretary Kennedy said, for the first time, we have a thoughtful and aggressive approach, thanks to President Trump, on taking on these special interests, should give all Americans confidence that this is an administration that stands for fairness, and it should chill the waters for those who believe they can push us away from our North Star, which is to take care of the American people. Mr. President, God bless you.
Thank you very much. Thank you.
Jay, you want to go next?
Sure. So I teach economics at Stanford as well as health policy. And one thing that's really, really simple in economics is that when you have a persistent price difference for the same product between 2 countries, there's something deeply wrong. And what President Trump has done is a historic measure that should have been done a long time ago. What we're going to do is make sure that those prices become much closer to equal, like a competitive market you'd expect. Right now what's happening is the American people are subsidizing in large fraction the research and development efforts for drug companies around the world by the higher prices that we pay. With this new order, Europe will share the burden of that. And in fact, if you may think of it as like as somehow it's like it's going after drug companies, actually it's helping drug companies. Because what we're also going to do with this order, what President Trump has done with this order, is he's said to European governments, look, if you are taking advantage of the drug companies by forcing them to charge very, very low prices, we're going to defend American drug companies in Europe. At the same time, we're standing up for the American consumer who's been paying far too high prices for far too long. I can go back decades to point to congressional reports after government report after government report of tremendously high drug prices, much higher than the rest of the world, and nothing has been done about it until this moment. And I'm really, really proud, President Trump, that you've done this. I'm really proud to be included in this and looking forward to the work ahead.
Thank you, Jay. Great. All right.
Thank you, Mr. President. On behalf of the many doctors I've talked to about this very issue, thank you for taking the bull by the horns. Presidents on both sides of the aisle have talked about this and floated it and said they've wanted to do it, so you've had the courage to do it. Thank you. I've been a surgical oncologist at Johns Hopkins for 22 years, and I have seen patients suffer. We didn't take an oath to heal patients and then watch their life get ruined financially, with their home, mortgage, retirement, going down the drain with GoFundMe campaigns, raising money from church communities and synagogues and friends they haven't seen in 20 years to try to raise money for what? For a system where Americans have been getting ripped off by 10, 12, 15 times higher prices than we see in other countries. The fundamental problem in healthcare is that we've had non-competitive markets. We can do little things around the edges, or we can transform those markets to competitive markets, and that's what this executive order does today. Imagine buying a Ford for $175,000, a regular car, and then hearing that people in London are buying it for $10,000 every day, all day long. That is the craziness of this system. We're going to do everything we can at the FDA to support this executive order. It's transformative. Thank you, Mr. President.
Thank you. Thank you very much. So thank you very much, everybody. It's I think it's a very important day. In many ways, you have, we'll start with the Houthis. We go to Pakistan and India. We go to what we did with China, the trade deal, and with UK. And by the way, many other deals are coming in very much. At a certain point, we'll just set the price because we know where we are. But we'll just set the price. But world trade is going to be terrific, and our country is going to be making a lot of money. Taxes are going to go down. Taxes are going to go down very, very substantially. But you look at all of the things that we've done, and now today I'm heading over. We'll see what we're going to do with respect to Iran. I think you have very good things happening there, too, by the way. I think can't have a nuclear weapon, but I think that they are talking intelligently. We're in the midst of talking to them, and they're right now acting very intelligent. We want Iran to be wealthy and wonderful and happy and great, but they can't have a nuclear weapon. It's very simple. And so I think they understand that I mean business, and I think they're being very reasonable thus far. And don't underestimate Thursday in Turkey. President Erdogan is going to be a great host, and we are doing some work with him having to do with Syria, too, by the way. We're going to have to make a decision on the sanctions, which we may very well relieve. We may take them off of Syria because we want to give them a fresh start. But President Erdogan's asked me about that. Many people have asked me about that because the way we have them sanctioned, it doesn't really give them much of a start. So we want to see if we can help them out. So we'll make that determination. But I think you're going to have maybe a good meeting. You have the potential for a good meeting, that a meeting wasn't going to take place. I insisted that that meeting take place. And it is taking place. And I think you may have a good result out of the Thursday meeting in Turkey between Russia and Ukraine. And I believe the two leaders were going to be there. I was thinking about flying over. I don't know where I'm going to be on Thursday. I've got so many meetings. But I was thinking about actually flying over there. There's a possibility of it, I guess, if I think things can happen. But we got to get it done. We got to save 5,000 lives a week. 5,000 lives is really more than that. It's worse than that. And when you see and you don't want to see it, but when you see the satellite photographs of the battlefield with arms and legs and heads all over the place, separated by 30 yards from bodies, doesn't make sense. Doesn't make sense. So we're working very hard to see if we can end that bloodbath. Okay, there shouldn't be too many questions. It's been covered pretty well.
Mr. President, thank you for taking questions. Two quick ones for you, starting on trade. If a longer-term deal is not reached with China at the end of these 90 days, can the American people expect those tariffs to go back up to 145%?
No, but they would go up substantially higher. You know, at 145, you're really decoupling because nobody's going to buy. But they can go, they got very high because of additional tariffs I applied during the course because of fentanyl and other things. But no, but they'd go substantially higher.
And then on Qatar, Mr. President,
I think you will have a deal, however.
Okay, you're confident that there will be a deal. On Qatar, has Qatar asked for anything in exchange for that $400 million luxury jumbo jet? And how can the American people be so sure that they will not in the future?
Well, I think what happens with the plane is that, we're very disappointed that it's taking Boeing so long to build a new Air Force One. We have an Air Force One that's 40 years old. And if you take a look at that compared to the new plane of the equivalent, stature at the time, it's not even the same ballgame. You look at some of the Arab countries and the planes they have parked alongside of the United States of America plane, it's like from a different planet. And it's close to 40 years old, might be more than 40 years old now. And we, when I first came in, I signed an order to get it built. I took it over from the Obama administration. They had originally agreed. I got the price down much lower. And then when the election didn't exactly work out the way that it should have, a lot of work was not done on the plane because a lot of people didn't know. They made change orders that were so stupid, so ridiculous. And it ended up being a total mess, a real mess. And when I came back, I said, by the way, what's going on with the Boeings that are coming in? Well, sir, they're way behind. And they are. They're way behind. They were way behind. Another mess that I inherited from Biden. And it's going to be a while before we get them. And I think Qatar, who has really, we've helped them a lot over the years in terms of security and safety. I think they, and very, very nicely, and I have a lot of respect for the leadership and for the leader, Qatar. And I think they knew about it because they buy Boeings. They buy a lot of Boeings. And they knew about it. And they said, we would like to do something. And if we can get a 747 as a contribution to our Defense Department to use during a couple of years while they're building the other ones, I think that was a very nice gesture. Now, I could be a stupid person and say, oh, no, we don't want a free plane. We give free things out. We'll take one, too. And it helps us out because, again, we're talking about we have 40-year-old aircraft. The money we spend, the maintenance we spend on those planes to keep them tippy-top is astronomical. You wouldn't even believe it. So I think it's a great gesture from Qatar. I appreciate it very much. I would never be one to turn down that kind of an offer. I mean, I could be a stupid person and say, no, we don't want a free, very expensive airplane. But I thought it was a great gesture. And I think it was a gesture because of the fact that we have helped and continue to, we will continue to, all of those countries, Saudi Arabia, UAE, Qatar, and others, we keep them safe. If it wasn't for us, they probably wouldn't exist right now. And I think this was just a gesture of good faith. And I don't get it. Someday it'll be like Ronald Reagan. They decommission them. They get to a certain age, they decommission them. It'll go to my library. They're talking about going to my library in years out. But I thought it was a great gesture. And it's something that was done by Ronald Reagan. They actually decommissioned the plane, and he put it in his library. And it actually has made the library, I think, a Boeing 707. It's actually made the library more successful. So it was good.
Do you plan to use the plane after you leave office?
No, I don't. No, it would go directly to the library after I leave office. I wouldn't be using it. No.
Mr. President, on the hostage, you said that the release of the American hostage, Eden Alexander, is a step in good faith to end this war. Do you expect any progress, or perhaps announcement on ceasefire during your trip to the Middle East?
We hope that we're going to have other hostages released too, as you know. So when I met with the hostages 3 weeks ago that were there for quite a while, you remember the 10 people that came in, mostly young people, 1 or 2 were a little bit older. They were explaining the trials and tribulations. I mean, they went through hell. And I said, how many are there? They said 59. I said, that's a lot. I didn't realize, because we got a lot out. We got a lot of hostages out, I think you will acknowledge. They said 59, but then they said, they followed that up by saying 59, of which 24 are living, the rest are dead. But the people whose son, mostly son, I think 1 daughter in this case, but mostly sons are there, or husbands, are there. Those people want the dead bodies as much as they want the live body. I have a mother that calls me, but came up to me when I first met her, and she said, "Sir, please, please get my son out. He's dead, but they have his body." And I asked her about that, and it's as though he were alive. The level of wanting that body back is the same. It couldn't be any more, as though he were alive. So, getting the bodies back is very important. That could be a thing having to do with the religion. It could be same. I was amazed at the level of importance. It's the same as if the son or husband or whatever was alive. So they said 59. In fact, they came in with a number 59 written out on like a sign on their chest. But they came to thank me for getting them out. And I said, "What does the 59 mean?" They said, "Well, that means there are 59 people." But then they said, "But 24 are living." Now it's 21. The number's 21. So now it's actually, we'll get Etan today. We think we're getting him today. So it's 20. So they have 20 live hostages there. The rest are dead bodies.
Mr. President, are you open to negotiating your tariffs on cars, steel, and aluminum with China or any other country?
Well, we're not even talking about that. We're bringing the car business back into this country. We have commitments, not only commitments, they've already started construction on many plants. They've left Mexico in a few cases. In a few cases, they've left Canada. They're not going to build in Canada. They're going to build here because we have the market, and the tariffs have been amazing. The election and the tariffs. November 5th was a big day, and on top of that, of course, you wouldn't have the tariffs without the election, I guess, if you look at it. But we have at least 11 committed massive car factories that are going to be built, that are in the process of being built. And some are going through, some have actually started. We also have renovations of existing factories where they weren't utilizing the full factory from years gone by, and now they're under full renovation. They'll be opening up full factories in a very short period of time. Our car industry is, I think we're going to have the #1 industry. You know, if you look at Japan and these others, they do tremendously with cars, and they can do that too. But you know, if they want to sell cars in the United States, they're going to have to build factories in the United States, because I'm interested in cars for the United States. Now, one other thing is, in our tax bill, we're giving not only no tax on tips, no tax on Social Security, no tax on overtime, but also we're going to get a deduction for people that borrow money to buy a car if it's made in America. If it's not, we have no interest.
The meeting with between President Putin as well as President Zelensky. If President Putin doesn't show up to these talks in person in Turkey, will you join Europe in putting higher sanctions on Russia?
If I felt it would be important toward getting the deal done, I'm the one that insisted on the meeting. They couldn't get a meeting because one said ceasefire, one said no ceasefire. It was going back and forth. I said, look, at this point, we got to stop it. Just go to the meeting. The meeting's been set. Go to the meeting on Thursday. And if I thought it would be helpful, I don't know where I'm going to be at that particular point. I'll be someplace in the Middle East, but I would fly there if I thought it would be helpful. Yeah, please.
Back to refugees. I want to ask you about South African refugees. Dozens of Afrikaners who claim discrimination in their home country are heading to the United States, where your administration is going to welcome them as refugees. Now, this comes as you've halted virtually all refugee admissions for people fleeing famine and war from countries like Sudan and the Democratic Republic of Congo. Why are you creating an expedited path into the country for Afrikaners but not others?
Because they're being killed, and we don't want to see people be killed. Now, South Africa leadership is coming to see me, I understand, sometime next week. And, you know, we're supposed to have I guess a G20 meeting there or something, but we're having a G20 meeting. I don't know how we can go unless that situation's taken care of, but it's a genocide that's taking place that you people don't want to write about. But it's a terrible thing that's taking place, and farmers are being killed. They happen to be white, but whether they're white or black makes no difference to me. But white farmers are being brutally killed, and their land is being confiscated in South Africa. And the newspapers and the media, television media, doesn't even talk about it. If it were the other way around, they'd talk about it. That would be the only story they'd talk about. And I don't care who they are. I don't care about their race, their color. I don't care about their height, their weight. I don't care about anything. I just know that what's happening is terrible. I have people that live in South Africa. They say it's a terrible situation taking place. So we've essentially extended citizenship to those people and to escape from that violence and come here. Yeah.
Mr. President, thank you. Are you letting China off the hook for these 90 days, and do you really believe that they will follow through with non-tariff barriers and remove those?
Non-monetary tariffs, yeah. Yeah, I think they're going to follow through. I think they want it very badly. I think they want the deal very badly. Again, this doesn't include the steel tariffs that I put on a long time ago that Biden tried to get off, but he couldn't get them off because it was too much money. You know, I took in hundreds of billions of dollars from China, what a lot of people don't know, but we put on the tariffs originally. And if I didn't do that, we wouldn't have a steel industry today. Now we have a thriving steel industry. It'll be thriving much more with what we're doing because this is the next level. But it doesn't include that, doesn't include cars, doesn't include pharmaceuticals when we do that. And the reason we're doing that will be to get them to come back in the country. You know, there are, again, I always say it because a lot of people forget, but if a company like Eli Lilly, which is making a massive investment in the United States right now, they're building many, many plants. They've already started like 7 of them, many plants, but they are not going to be tariffed. There's no tariff cost. So they're all doing that. They're all coming back to the United States. I mean, I'll tell you what, I hope I get the benefit of watching this because, as president, because, you know, it takes a little while to do this stuff. And we're doing it early in the administration. If you think of it, we have, I believe, if you look at the real total, it's over $10 trillion committed for plants and factories. Other administrations haven't had $1 trillion over a 4-year period, even over an 8-year period. We have over $10 trillion committed in one form or the other over 2 months. Give me a break. I'm here to hear 3, but let's give me a break on the first month. We want to get acclimated. But, you know, but if you think about it, it's really 2 months. And so in 2 months, we have an investment already of over $10 trillion. And other presidents haven't had that done over a year, over 4 years in some cases. It's unprecedented. There's never been anything like it. It's a very exciting time in America. Thank you very much, everybody. Thank you.
All right, that was President Trump in the White House, making some comments about a wide range of issues, particularly centered on healthcare and the news that the Trump administration aims to cut U.S. drug prices pretty dramatically across the board. So that could be, Alex, just huge for just, I guess, healthcare, because you always wonder why drugs are so expensive. I'm not sure I understand why they are, but at least President Trump. All right, he's still talking. We'll go back to President Trump in the White House.
I think you're going to see a tremendous cut. I don't think. I mean, I know you're going to see it in Medicaid and Medicare. That cut will be massive because drugs are 50–60% of the cost. So Medicaid costs are going down and Medicare costs are going down because of what we're doing today. And there's no, it's not like, oh, gee, well, maybe it won't happen. It's going to happen because the other countries have no choice. Now, the drug companies are going to have to say, listen, if you don't pay more, we're not going to give you the drug, and they're willing to do that. So that's it. They have to, we have to equalize.
Mr. President, what is price controls?
Say it?
How do you respond to the fact that this...
It's not price control, no. What was price control is before. If you want to talk about price control is what they were doing. They were making us pay. They set a price, and they said, here's what we're going to pay. And anything else, charge America. Because at that time, they had a very stupid president, and it really went crazy during the last 4 years. And remember this, the Democrats are the ones that allowed this to happen. They were the ones that were the protector of this pricing system. And I think it's going to be very hard. You'll have to ask Democrats, are they going to vote against the one great, big, beautiful deal that's being negotiated now, tax cuts, etc. When now on top of the tax cuts and regulation cuts, all the things, now you're going to say that the price of your medicine is going down by 60, 70, 80%. You're going to vote against it? I think a lot of Democrats are going to be forced to do something that their leaders are going to beg them not to do, and that's vote for the bill. I don't see how they can vote against it. How can they vote against it when drug prices, drugs and pharmaceuticals are going to be down 70, 80%? It's going to be very interesting.
Mr. President, what do you say to people who view that luxury jet as a personal gift to you? Why not leave it behind?
You're ABC fake news, right?
Why not?
Only ABC. Well, a few of you would. Let me tell you, you should be embarrassed asking that question. They're giving us a free jet. I could say, no, don't give us. I want to pay you $1 billion or 400 million or whatever it is. Or I could say, thank you very much. You know, there was an old golfer named Sam Snead. Did you ever hear of him? He won 82 tournaments. He was a great golfer. And he had a motto: when they give you a putt, you say, thank you very much. You pick up your ball and you walk to the next hole. A lot of people are stupid. They say, no, I insist on putting it. Then they putt it and they miss it. And their partner gets angry at them. You know what? Remember that, Sam Snead. When they give you a putt, you pick it up and you walk to the next hole and you say, thank you very much.
Respectfully, sir, as a businessman, some people may look at this and say, have you ever been given a gift worth millions of dollars and then not received anything?
It's not a gift to me, it's a gift to the Department of Defense. And you should know better, because you've been embarrassed enough, and so has your network. Your network is a disaster. ABC is a disaster. Here is the bill. Bobby, come on over here. Now you're talking about trillions and trillions of dollars.
You've been listening to President Donald Trump speaking at the White House for the last hour, signing an executive order on drug pricing. This was a wide-ranging interview / news conference. The big headlines here is that Big Pharma must stop price gouging. That was one of the big takeaways. He's saying that drug prices could go down by as much as 90% for some, or even more. Also taking a shot here at the middlemen, saying they're going to cut out the middlemen to accelerate price reductions. Now, in essence, blaming other countries rather than the drug makers for that. Now, if you take a look at some of the PBMs, the pharmacy benefit managers, that those middlemen, that's who he's talking about, like a CVS, the stock is down by about 2.75%, did get a sharp move lower, now definitely off the lows of the session. But some of the other drug stocks actually rebounding despite some of the headlines here, Paul.
Yeah, interesting here. It's interesting. I used to think film accounting in Hollywood was the most difficult accounting, but healthcare accounting, I honest with you, I just don't understand it. There's so many different parties involved. I'm not sure who's paying, but drug costs are a huge issue for most people. And when you take a look at your bill at the end of the day, the drug prices are a big part of it. So to the extent that those can come down, that could be a good thing for consumers. Let's check in with Jerry Smith. It's his job to understand this stuff. He's a biotech reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. So I guess what we know now, Jerry, is that the president's executive order is looking to bring drug prices down. Can that happen? Or how does that happen, I guess? Can that happen? How does it happen? Do we know?
Yeah, I think that's what a lot of investors were wondering. And I think we've learned more details in the last few hours, and I think the takeaway is that this is not going to be as bad for the pharmaceutical industry as many people initially feared. I know that President Trump originally announced this last night on Truth Social, and I think overnight there was a lot of fears that he could go directly to what's called a most favored nation policy, and the idea is that the U.S. government would pay the same amount for drugs for Medicare or Medicaid than a country that's paying the lowest amount. But what we've learned in the last hour is that there's a lot of nuance here. We're starting to get more details. President Trump suggesting that maybe this is going to be legislation that comes out of Congress. Okay. There's going to be 180 days of negotiations before they potentially go to this most favored nation policy. I think there was initially a lot of concern. Now you're looking at the stocks of companies like Merck and Pfizer that were down this morning and are now recovering. And I think investors, the takeaway is this maybe is not as bad as they initially feared.
Also, what we've learned, in particular with trade, is that we have an opening salvo and then there is negotiation. Right. When we take a look at the issue of drug pricing, on the flip side, it's like, well, we need high prices for R&D, and the U.S. gets the benefit of that R&D first. On the flip side, it's like, well, why should we pay more for drugs that are our drugs versus other countries? Which is right, or what are the nuances there?
Yeah, Trump is right that the U.S. pays more for medicine than anyone else in the world. So, these are drug companies that They spend a lot of money on R&D, and to recover that, they charge the prices that they charge. And you, in countries like in Europe, where these drug makers are negotiating directly with these governments, the governments draw a really hard line, and you do see a substantial difference in the price of what people in the U.S. pay for drugs and what people in other parts of the world do. So that part of it is correct. But how do you lower the price of drugs? I mean, one thing that came up in this press conference we just saw is that President Trump's talking about going after the middlemen. These are these sort of shadowy players. You don't really get a great sense of who they are. They're called pharmacy benefit managers, or PBMs. Drug companies have for a long time said that these PBMs are a large reason why the prices go up, that they are inserting themselves into the drug price negotiations, and that's raising the price. So Donald Trump's talking about going after them as well, which is something that the drug makers have been pushing for.
So is the expectation that this is just kind of the opening salvo and what will be a longer-term negotiation amongst all the parties, or is this something that at the stroke of a pen can affect move, I guess?
I think what we've just learned is that this is going to be a negotiation. This is not going to be the Trump administration saying you have to charge this amount. This is 180 days going forward from the start of the executive order. Is there going to be a negotiation? There's some threats from the administration that if the drug makers don't play ball and don't lower their prices, that the administration could potentially start importing drugs from overseas, which would lower the price for Americans and provide more competition for these companies. There's also a suggestion that they might take a closer look at M&A. So there's some threats here. If the drug makers don't play ball and come to the table and lower their prices, but I think there's some relief from investors that this is not going to be as disastrous as we might have thought of a few hours ago.
All right, Jerry, thank you so much. We appreciate that. Jerry Smith, biotech reporter, former media reporter at Bloomberg News. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM satellite channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now. S&P 500 up 2.6%.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We have a great hour lined up for you. We just heard a very wide-ranging press conference with President Trump signing an executive order on drug pricing. We'll follow this story for you, including the equity reaction with Sam Fazeli. He heads up our pharmaceutical coverage for Bloomberg Intelligence. Plus, Nathan Dean, Bloomberg Intelligence senior policy analyst, will join us on the latest. James Abate, managing director and chief investment officer at Center Asset Management. Also, how do you invest then with this environment? And Brant Standridge, president, consumer and business banking at Huntington Bank. We're going to discuss the bank's expansion as many other banks wind up pulling back, plus the overall growth story. How is the consumer doing? Their worries and then their facts. So what do the facts actually look like? But let's kick it all off for you right now with a Bloomberg Business Flash.
And it's only Monday.
It's only Monday.
This Bloomberg Business Flash being brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centered support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Stocks surging. The major averages after the news that the U.S. and China are going to temporarily lower tariffs while they work on a long-term deal. 9 of the 11 major industry groups in the S&P 500 are up. You have consumer discretionary and information technology leading the charge. The Bloomberg Mag 7 index, that was up 4.7%. President Trump, they are signing the executive order with the intent of lowering the price of prescription medicines. The current plan seems similar to one proposed during his first term. The pharmacy benefit managers, as you mentioned before, Alex, they're among the lower stocks right now. CVS shares down about 2.7%. Meantime, Seema Shah, principal global investor, says the U.S.-China trade talks, they have set the tone for these markets.
If it's telling us that at least the Trump administration is not going to be moving forward with tariffs at this kind of level or the level before today, I think that is definitely good news, and there's certainly going to be a positive impact for the U.S. economy and for the Chinese economy as well.
Right now, the S&P 500, 149 points higher. That's up 2.6% at 5809 on the index. It is worth noting the S&P 500 still down over 5% from its high. The Dow Jones Industrial Average up 988 points, pairing some of the earlier gains, up 2.4%. And the NASDAQ 100 right now up 3.2%. That is a 645-point pop. And just in time for grilling season, U.S. beef prices hitting record highs. These are cattle futures, wholesale beef cutout prices, whatever that is, and retail prices, all soaring heading into the summer months. This was on the CME on Friday, at least. The live cattle futures settled up 0.2% to nearly $2.15 a pound, and that is a record for the futures. All right. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well, so head over to youtube.com and search Bloomberg Live Podcast. That's where you'll find us. Market Drivers today is brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. Stocks moving higher, as John Tucker was reporting. Let's take a look at some stocks on the move today. I'm Paul Sweeney with Alex Steele, and we're joined by Bloomberg's Christine Aquino. Christine, what are you looking at?
Well, Paul, we're going to have to take a look at those drug makers, aren't we? Because of that executive order that President Donald Trump said he's going to be signing. Taking a look at Pfizer specifically, that's actually up more than 2% at the moment. Pre-market losses there a little bit, but definitely reversing those. I think this is because we did get a little bit of a steer on what President Trump is going to be doing on this. He posted on his social media account earlier that there will be cuts of, quote, 59% plus in terms of prices, but investors also digesting some of the details. Looks like the focus is going to be primarily on Medicare and weight loss drugs, so perhaps less broad than some investors were anticipating, and so we're seeing a bit of a gain on Pfizer shares and other related stocks.
Well, also, just, it's an opening salvo, so if that's the opening, it's not as bad as expected, then maybe that winds up helping just the theme. You're also looking at Best Buy.
Yes,
what's going on here?
Best Buy. Well, that is one of the key beneficiaries of those successful weekend talks between the U.S. and China, or at least signs of improved relations between the two countries. Best Buy, of course, one of the retailers in the U.S. that are primarily exposed to those imports from China potentially dropping off or becoming more costly. Bloomberg Intelligence analysts saying that, because retailers were entering the year holding less than 1% or 1% less of inventory than they had over the past 3 years. Best Buy among the retailers that would really have been exposed if we did get an effective trade embargo between the U.S. and China. But looks like that's going to be less the case now, more cordial relations, at least between the two countries. We'll see if we can get a deal that has details that offer the same sort of reassurance to investors.
All right, what else we got here?
Looking at Nike as well, Paul, that is up at the moment more than 6%. Again, another beneficiary of those U.S.-China talks. And note that half of Nike's shoes are made in Vietnam, but the overall trade optimism is helping because, of course, we were also off the back of the U.S. Striking a deal with the U.K. And, Nike definitely struggling in other aspects as well. We have seen last week the company announcing changes to its senior leadership team. And last April, Nike was also among the companies that called on President Trump to exempt footwear from tariffs. So the fact that there seems to be more trade optimism, definitely good news for Nike for today.
Yep, everyone's seeking out some of those exemptions for sure. All right, Christine, thanks a lot. Christine Aquino Snow joining us there. And for more conversations just like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere else that you get your podcasts. Let's go deeper in the market here, because lots of questions. Yes, we're seeing a rally, right? We're unwinding a lot of the positions that just about a couple weeks ago we thought were sure bets, like short dollar, short oil, get out of some cyclical stocks, don't like the small caps. All of a sudden, that's now reversing. Vincent Signorella, Bloomberg macro strategist, joins us now. Vincent, how much of this is now short covering, right-sizing positions versus I re-believe in U.S. economic exceptionalism?
Definitely think it's the former. There's a little re-believe about U.S. situation turning and the trade situation turning around, but I think we're missing a lot of specifics. We've got a lot of generalities. Everybody's hugging and kissing in Switzerland on Saturday, but there's absolutely, the only thing that's come out of it is that we pulled back some of the steeper tariffs that we've imposed on China from that 145% level, but they're still in the 30% range. We still have 10% tariffs across the board with everyone else. There's no relief in cars or aluminum, which shows sort of no effect for Canada and Mexico realistically. Was talking pretty harsh about EU, basically saying that the EU is nastier in dealing than we are with China. So there's still a lot of ifs. There's still a lot of geopolitical risk on the table. We've got a lot of aggression going on in India and Pakistan. The Ukraine situation has not been resolved, and the Middle East is always a hot spot. So a lot of ifs with this rally that you sort of need to take with a grain of salt, I think.
So we are seeing, again, just in the stock market, 2.5% to 3.5% moves higher in the equities. Seen a little bit of a bounce in the U.S. dollar, but a lot less pronounced really over the last week or so when we saw kind of a re-risking here. What's that say that the dollar's maybe not participating as much as other assets?
Dollar is a tricky story. It's the one thing I think you're looking at with the dollar rally is you're seeing a move higher in yields, and so that's probably lifting the dollar a little bit. But you also have inflationary pressures still building, and when you see inflation pressures building, you need a very pronounced increase in yields to offset inflation, so that real yields don't decline, which is something that usually eats into dollar gains. So that's still a big question for investors and where to go in the currency markets. There's a lot of, like if I look at it now, where am I going to turn? Last week everybody loved the euro, not so much today. So it's still a lot of questions to be answered as to where to hide when it comes to currencies.
Where's the positioning in the currency market right now?
Yeah, that's a really good question. I think it's probably a little bit more centered in North America. I think there's the belief that eventually we're going to kiss and make up with Canada and Mexico, that's just been a lot of harsh rhetoric in the trade situation, and that's something that really is a need to get solved. That's not something going forward we're going to be able to continue where we have trade issues with Canada and Mexico. So if I were going to hide someplace, it would be with the Canadian dollar, maybe the Mexican peso. I would love both of those over the euro, to be perfectly honest.
Vince, we're talking to Eric Balchunas. He covers the ETFs for Bloomberg Intelligence. He says all year, ETFs have been taking in cash into equity ETFs. How do institutional investors see that when they're selling, but all the retailers are coming in and buying them?
That's been the question, right? Retail's been on the buy. Institutions have been on the sell side. If it turns out the retail's right as we go further and further into the new year, you're going to see those hedge funds, those algo traders, going to have to catch up. Right. They're going to be behind the eight ball. But so far when you look at the annual gains of the S&P, you don't have gains. We're still down on the year, so there's still time to hide in cash. When and if the equity market turns positive for the year, then I think you'll see the institutional investors start to step up. They'll have no choice.
All right, Vince, thanks a lot. Really appreciate it. Vincent Signorella, Bloomberg macro strategist, joining us there. All right, let's get to some of the logistics here on the policy side. Nathan Dean, Bloomberg Intelligence senior policy analyst, joins us now. So a couple things to dissect, obviously one is the executive order for big pharma and drug pricing. The other is, of course, U.S. and China slashing tariffs. Here's what I don't really understand. If we're going to go back to tariffs that were roughly where they were before the 145% and the 125% on the respective countries, why are we getting this sort of celebratory tone in the market?
Well, I think it's just because of the idea of this pause, you know, that the worst case scenario is maybe not the worst case scenario. But, you know, I go back to what Treasury Secretary Scott Bessent said this morning in his interview with Jonathan Ferro, you know, and I'm paraphrasing here. He said, look, you know, the 145% was because of China's retaliatory nature. You know, if you go back to April 2nd and look at the Liberation Day of that 34%, it's a little bit more in line today with that 30%. So I think the market is going to wake up in the next day or so and realize that tariffs are going to remain elevated. Yes, it's not going to be as much as 145%, and that's a good thing. And maybe it opens up the boats so that they can start coming into the west coast of the United States, and we begin to, you know, alleviate this idea of, you know, shelves being empty and so forth like that. But elevated tariffs are still going to be here, and that's going to be the norm. We're really working towards this kitty scenario where it's like a 10% baseline tariff, maybe a little bit higher for other countries like China, with special exemptions, maybe for automobiles, pharmaceutical, tech, you name it.
Hey, Nathan, to what extent did politics play a role here? Folks on the Hill, maybe Republicans saying to this White House, hey, we got some elections coming up, and if we're talking about these super high tariffs, that could be a problem for us.
Yeah, I think there was probably more politics here than the White House is probably letting on. And I think it's not so much the elections, but more so of those 4th of July barbecues. Because, you know, if you think about it, and if you believe the idea that, you know, a lot of these ships coming into the West Coast of the United States are down 30 to 40%, these are the ships that are bringing over items for the Christmas retail season. And if you begin to see a combination of, you know, President Trump's comments on, well, maybe American children don't need $30, they get $2. With some, you know, empty store shelves, and with the idea that maybe that we're going to get to a situation where small businesses are really harmed from this, I think this was sort of the White House's way of saying, look, you know, we need to also try and save some face here. You know, I didn't think they were going to go down to 30%. You know, I think they around 60 to 80% is where you would have asked me on Friday. I would have said, but, you know, they're going to 30%. It does give the market a lot of breathing room. Yes, we have lots of negotiations that have to take place over the next 90 days, but it's something the market can actually work with in terms of clarity purposes.
I also wonder if there's breathing room now in terms of dealing with a tax bill and focusing on deregulation. What's the timing of both of those things there?
Well, so for the tax bill, this tariff announcement actually hurts it a little bit from the standpoint that the House Republicans were hoping to use $2 trillion worth of tariff revenue to help pay for this bill, which is north of $5 trillion. And, you know, if you come out and say, look, we're going to go back to a 10% baseline tariff for everybody, at least what the situation is turning out to be, you're not going to get anywhere close to that $2 trillion. So now the question is, how are you going to pay for it? Now, there's going to be some markups this week, House Energy and Commerce, House Ways and Means Committee. By this time tomorrow, you'll know exactly where the House efforts are in terms of gutting things like the IRA or changing the tax, you know, provisions of this country. But what we're telling our clients is just remember, the House is throwing the kitchen sink in with this bill. They're throwing in things that we don't think will even pass the Senate parliamentarian and wouldn't even get under the what they call the bird rule, wouldn't even fly through that. So look for everything to be thrown in and then things to be scaled back. The biggest question, though, is how are you going to pay for it? And I don't think anybody on Capitol Hill on the Republican side knows how they're going to pay for it at this point. And as a result, there is a possibility that this may not be permanent. They may be pulling it back and saying, you know, maybe it's only worth 4 to 6 years worth of tax extensions.
What are the dates that we need to pay attention to? Because, quite frankly, I am not paying attention. I am overwhelmed. But you tell me the date I need to pay attention here from what we're going to hear from Congress.
So for the next 2 weeks, you're going to see this debate in the House. Lots of headline risks. But again, it's just headline risks. Ultimately, we think a House vote will probably come at the end of this month or probably more likely in June. That's when the Senate's going to get it. The Senate's going to say, thank you very much. They're going to essentially throw it out, and then they're going to say, look, we will take and do whatever we want and send it back to you. We think that's going to happen around the 4th of July timeframe. This is also under the assumption that the debt ceiling remains in this bill. Because if the Treasury Secretary Scott Bessent said the X date for that debt ceiling is in August, Congress needs to wrap this up before then. So we're thinking ultimate passage in that mid to late July timeframe. If the debt ceiling provision is stripped out, if they aren't anywhere close to, coming to a deal, they'll have to do the debt ceiling separately, and then the real deadline for this is probably going to be the October-November timeframe.
In terms of then the market, as we sort of look ahead to that, what's going to be the next catalyst within the next week or week and a half? What are you looking for?
So I think it's going to really be the House deficit Republicans. You know, this is Representative Chip Roy, for example. He just tweeted out about 20 minutes ago that he is not going to vote for a bill that he, in his words, would add $20 trillion to the deficit. Now, I'm not going to say that we think it will go that far, but, you know, you are going to see a lot of statements from Republicans who are not happy with this legislation, and it's just part of a negotiation. So look for this sort of seesaw moment of, yes, we have a deal, no, we don't have a deal. But I think for the next 2 weeks, you're going to see more negative headlines than positives. And then sometime maybe around Memorial Day, I think the Republicans will start to get a better idea of what that plan is going to look like in order to get House passage.
All right, great stuff. Really appreciate it, Nathan. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, joining us there. All right, coming up, we're going to have you covered from all different angles here. We're going to tackle the market and what to do with James Abate, Managing Director and Chief Investment Officer at Center Asset Management. Lots of notes out saying that we're going to see a lot of repositioning, but that's not really necessarily fundamental buying. This is tactical buying, mechanical buying. It does make a difference in terms of the sustainability. Plus, Michael McKee, Bloomberg National Economics and Policy Correspondent, take a look at what economic data we should be paying attention to for the week. This is Bloomberg Intelligence. Happy Monday, everybody.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, and the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Well, the major stock averages are pushing higher. Risk on today in the S&P 500. 388 stocks are up, 112 or lower. NRG Energy, the leader in terms of index points. Energy acquiring a fleet of natural gas fired power plants from LS Power Equity Advisors. The price tag there about $12 billion, and that includes debt. The news on the trade front giving a boost to the stocks today, but investors say keep in mind we still have this week the inflation data, retail sales, and earnings that may point to the future direction of stocks. Now, according to Morgan Stanley, it's too early for investors to sound the all clear. Right now, the S&P 500 up 142 points. That's up 2.5%, 5801 on the index. The Dow Jones Industrial Average up 919 points. And the tech-heavy NASDAQ 100 up 628 points. This is a rise of 3.1%. Most active right now, shares of NVIDIA, they're up 4.1%. Now, overall, the Mag 7 index from Bloomberg, that is up 4.6%. And finally, travelers increasingly opting for road trips over flights. So this, according to AAA, 39.4 million Americans are going to drive this coming Memorial Day weekend. That's up 3.1% from last year. That would be the most in 20 years. And at the same time, 3.6 million people plan to fly, which is kind of a paltry gain.
Yeah.
Just about 1.7% from the previous period. So, you know.
Memorial Day weekend, the Vespa scooter. That's it. If the Vespa scooter can't get me
I was hoping you'd go there. Now, I've got the bicycle out.
All right.
So it's 1.5 miles to the beach.
Yep.
Wait,
that's it.
But before Memorial Day, you can't take the Vespa?
Oh, yeah,
There's like
you
a
can.
hard-
But I'm
oh,
just
okay.
saying, you know, it's just, I don't travel in the summer.
Ah, I see. Understood.
And even when we do our remote broadcast down in D.C.
Mm-hmm.
next month, I'm taking a train. I'm not flying down there.
We're going to D.C.?
Yes, we are.
I should probably book
Oh,
my
when
travel.
are we going?
Yes, I don't know.
I can't wait.
All right, let's get to
a trip.
Our next guest.
So excited.
John Tucker, thank you so much. We appreciate it. Alex Steele and Paul Sweeney. We're here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's get right to our next guest. James Abate joins us, Managing Director and Chief Investment Officer for Center Asset Management. James, we wake up this morning, it seems like maybe the trade environment's not that terrible, not that strict. What do you make about it, and what do you make of the market's move today?
Well, clearly, you know, the announcement that the U.S. is going to cut tariffs on Chinese goods to 30% from 145% for 90 days, and then China is going to cut tariffs on U.S. goods to 10% from 125 is good news. It's a truce. Again, this is a 90-day cooling off period, though. We'll have to see what develops. You know, unfortunately, what we see with President Trump, though, is he continues to negotiate against himself in public. It's a little like watching the same person playing twins, like Michael B. Jordan on Sinners, who played the actor, or the actor who played the Winklevoss twins in the movie The Social Network. It's like the same person negotiating against themselves. So I think market's going to remain volatile, and it might be in country's best interest to just stall on reaching a trade agreement with the United States, given how we seem to be able to negotiate against ourselves and lowering barriers.
But to that point, does the market understand now that there is some kind of a Trump put? So is the reaction function on the initial headline now going to just be a little different?
It's possible, but you know, at the end of the day, what we really need to see is the U.S. convert this current relationship, and China is the best example of a significant trade deficit in return for capital inflows, namely into our treasury market, with a trade deficit that somehow equals, you know, inbound fixed investment. I think there's a lot of probability that we can accomplish that with the EU and Japan. I'm not so sure we can accomplish that with China.
All right, James, as a chief investment officer and somebody who manages money, other folks' money, what do you do here? How's your world changed in the last 4 or 5 months here?
Well, we're of the belief that the risk of recession has been reduced. So clearly, when you think about that, you know, what sectors should investors be looking at? And we've been very much pounding the table that U.S. regional banks are poised to benefit from a number of tailwinds. So one's a steepening yield curve, better loan activity, some degree of acceleration in M&A, and even an easing of the regulatory environment. So, you know, when you look at the regional banks, after the recent sell-off that we had, with many trading at price to tangible book multiples just above 1, they have what we believe to be the best asymmetrical opportunity in the market and see them as a prime beneficiary of increased U.S. onshoring and a movement of supply chains to domestic manufacturers. So, you know, for us, the source of funds that people should be looking at are consumer staples, given the recent disappointment and not really being very defensive at all. And even the Magnificent Seven, we think the terrific opportunity for, you know, active management now is really quite unprecedented. And this pivotal moment away from the Magnificent Seven, away as the year progresses, might be quite strong.
All right, James, really appreciate it. Thank you so much. I don't envy your position at all. James Abate, Managing Director and Chief Investment Officer of Accenture Asset Management, joining us for a broad take there on the market. Well, Treasury Secretary Scott Bessent talked the status of trade negotiations with China on Bloomberg Surveillance earlier this morning, and he told Bloomberg's Lisa Abramowitz and Jonathan Farrow that it would be implausible for tariffs on China to drop below 10%.
Are you saying that tariff rates will only go up from here if this really is a floor of 10% on the Chinese side and 30% on the U.S. side?
I'm not saying that they're going to go up, but it would be implausible that they would go below 10.
That was Treasury Secretary Scott Bessent speaking with Bloomberg Surveillance earlier. Joining us in studio is Michael McKee, Bloomberg International economics and policy correspondent. So we've been hearing like, okay, maybe a recession's not the base case anymore, but can we really re-rate growth guesses based on policy that seems to go back to what policy was come April 1st?
Well, we don't know what the policy is at this point. They're making it up as they go along, and it does seem that we're going to have a lower tariff rate maybe on China, but the 10% is still going to be in place around the world, it appears. The president seems to be very firm on that. We don't know what the reciprocal tariffs will end up on or who they will end up on. And there are other tariffs yet to come, pharmaceutical tariffs, despite what he was doing today with drugs. So it's hard to say that anything has in particular changed since April 2nd, other than the fact that everything changes every day. But the overall situation, the idea that we are going to have drags on growth and possibly higher prices, that really hasn't changed.
What's an economist to do, Mike? I mean, one day tariffs are 140%, the next day they're, I don't know what they are, but certainly less than that. I'm thinking about the good folks at the Federal Reserve. I mean, how do they punch things into their model?
Well, I've been hoping that maybe my boss would just send me on vacation until this is all worked out. But the Fed is doing modeling based on scenarios. They can't put exact numbers into their models because we don't have them. But they are looking at situations where there's a baseline 10% tariff and then trying to figure out what additional tariffs might come in on some countries. We've got the auto tariffs and the steel tariffs in place right now, so they can also figure that out. But that's why the Fed says it's data dependent, because they don't have any way to really forecast the future at this point. So the best they can do is the best everybody else can do. And every time you have somebody on here, an economist or a portfolio manager, they're all saying the same thing. We don't know.
Different ways of saying we don't know.
Exactly.
What are you looking for this week in terms of data and the super cool things we need to watch for?
Well, the super cool things we need to watch for, obviously, are tomorrow, the Consumer Price Index. That's going to get Wall Street's main focus. And there's a chance that we're going to see some evidence of the Trump tax increases on imports in this. And not just that, but the other tariffs he's put on. The auto taxes, we have seen people try to buy cars ahead of time, including somebody sitting right next to me. And so there is more demand for cars, for new cars, and that means that people are going to be trying to buy used cars. And we've already seen that for the month of April, used cars went up at the fastest pace since 2022. So look for something like that. Look at some consumer goods and how much they've likely gone up. But the big, Thursday's PPI. We'll see what kind of intermediate inputs prices have risen. But what a lot of people are going to want to see is retail sales on Thursday, because we want to know if the consumer, who is extremely depressed, according to all polls, is stopping spending. And if that's the case, then we have more of a problem.
We have a red headline crossing the Bloomberg terminal. Hamas says released Israeli-American hostage Eden Alexander. So we'll have more reporting on that going forward. Mike, is Global Wall Street, are they dialing down their recession calls? Are you sensing that on today's news, do you think?
What I'm seeing is messages that say, we don't know yet, and so we're reluctant to make a decision. I think you'll see people push back a little bit on they're all in the 35 to 55% range for chances of a recession.
50% is always my favorite. I have a 50% chance that I'll go to bed by 10 o'clock tonight.
I hope you have. Well, see, this is the thing. The percentages, usually when you get to 50%, you end up with a recession. So if you get to 50%, I hope you're in bed by 10 o'clock.
Fair enough.
But so those percentages will be dialed back, but in part that's a way to avoid saying yes or no, because nobody wants to predict a recession that doesn't happen, or vice versa. So we're going to kind of be up in the air on that for a while, and it'll just bounce around. We've got 90 days now till we know what the Chinese tariffs are going to be. We've got still 60 days till we know what the reciprocal tariffs are going to be. In the first term, it was, this will happen in 2 weeks, and now 90 days is the new 2 weeks.
All right, so we'll just, like everybody else, we'll just kind of wait for the next tweet and the next social posting, and to get a sense of where U.S. Policy is going. Michael McKee, thanks so much for joining us. Mike does all the economic stuff. All right, so we're confirmed we're going to train down to D.C. as opposed to fly.
Yeah, I never fly to D.C.
See, but Mike, he goes the other way.
Mike does, I know, we fight with him all the time. No, I'm definitely going to train it. We're apparently going to D.C. in a couple weeks.
Yes. Congratulations.
Well, thank you.
Or congratulations, I should turn the microphone on. And I can let you know what flights are the best. And
No, train.
Yeah,
all
as
the
we
way.
get stuck in Trenton or something.
Yeah, under the tunnel going under the Hudson.
Yeah, we've just completely jinxed us, like
Exactly.
till the end of time. All right, Mike, thanks a lot. Really appreciate it. All right, coming up, we are going to talk to Brant Stanridge, President, Consumer and Business Banking over at Huntington Bank. A lot of other banks are pulling back or just staying pat, but Huntington is also expanding. So we're going to get a read on that. Plus, we want to know about the consumer and lending and what that looks like. He's the perfect person to talk to on that. So we will get the latest for you. This is Bloomberg Intelligence on this Monday, where it's pretty busy if you're a bull to the upside. S&P is up by 2.6%. Volume's pretty strong. The NASDAQ is up 3.5%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This flash being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to Commonwealth.com to learn about their consultative support and technology. Risk on rally after China and the U.S. announced the 90-day truce in the trade war. The value of the dollar climbing. Treasury yields also jumping on expectations that the Fed won't have to cut interest rates so deeply this year. 2-year is up 8 basis points, 3.96 right now. The 10-year is 5 basis points higher. That is at 4.33. Overall, the S&P 500 up 140 points. That is up 2.5%. We're at 5,800. On the index. The Dow Jones Industrial Average up 909 points, and right now the Nasdaq 100 is up 627 points. That is up over 3%. Lululemon jumping over 7%. More than a quarter of its fabric comes from mainland China. Retailers like Best Buy and Amazon, they're also jumping because much of what they sell that comes from China and elsewhere in Asia. While investors welcome the China-U.S. trade progress, Lori Calvasina at RBC Capital says what really matters is the impact on company earnings.
It really matters what the companies think about this and how they're going to be managing around it and how that impacts, various things going on with their customers and their decision making. So there's still some more work we have to do to really understand the ramifications here, but it is a nice start to Monday.
Nissan Motor is going to eliminate 11,000 more jobs than previously planned. This is part of a plan to restructure its business. Now, according to NHK, overall job cuts will be closer to something like 20,000. That's about 15% of their entire workforce. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We are also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Live Podcast, and that's where you'll find us. One of the most read stories on the terminal today, and there's lots of news out there. U.S. President Donald Trump said he would likely speak to Chinese leader Xi Jinping later this week following talks between Washington and Beijing to temporarily lower tariffs and de-escalate the trade war. So I'm kind of always in that camp that talking is better than not talking,
Yes, absolutely.
And I think, so we've already got some agreements here. Just 145% U.S. levies on most Chinese imports. That's going to come down to 30%. 125% Chinese duties on U.S. goods. That will drop to 10% for 3 months to give the countries time to negotiate a broader agreement. So maybe they can get something done, and maybe a discussion between the two leaders can accelerate that.
Yeah. And that raises the question of what do you do with the markets, right? So you look at the rally and you're like, oh, you have lots of optimism, et cetera. But I wonder in reality how much of that is actually funds. You got a couple things going on, right? Commodity trading advisors, so they're called CTAs. You have volatility controlled funds. You have hedge funds where they sort of shift around based on how much risk they're allowed to kind of carry based on what the markets actually do. So Citi says that CTAs have flipped long on the S&P. They're max long on the NASDAQ 100 and now covering shorts in the Russell 2000 based on moves this morning, and that if you see kind of a change in the S&P, you're going to have to add on to this, meaning that just because you see a rally doesn't mean it's real extended fundamentals.
Yep,
is
interesting.
My whole fabulous point.
Well, that's good. I love Stuart Kaiser from the folks over at Citi with his notes are very clear and easy to understand. I appreciate getting those notes. Let's go to a pro here, Brant Standridge, President, Consumer and Business Banking at Huntington Bank. Hey, Brent, we've got just tremendous amounts of volatility so far here in 2025. When you go sit down with your corporate clients, how is it reflected in their activity? Are they sitting on their hands? Are they trying to move forward? What are you hearing?
Well, Paul, first of all, thank you for having us on the show. We are closely monitoring all the developments that relate to the broader economy, and today's announcement is clearly another data point. Our focus has been on our customers, and what we're hearing specifically from our customers is really more of a wait and see. All of the events of the last few months have introduced a higher level of uncertainty, and as a result, many of our customers are waiting to see what will happen and delaying some decisions to obtain more certainty.
So based on that, what are the expansion plans for Huntington? Like, are you doubling down here, or are you holding pat? Because a lot of companies are just like, we're in a wait and see mode. We're delaying, but we're not abandoning kind of projects. How are you guys thinking about it?
Well, we're continuing forward with our investment plans. This is a important proof point for our organic growth story. We're very bullish about our opportunity that exists in the Carolinas. It's a fast-growing, dynamic market. We already have 30,000 customers there. Our approach and culture have allowed us to attract some really fantastic and talented individuals. And our business model really resonates in the market, which is around local and bringing highly qualified bankers with local relationships to those customers, supported with national expertise. And so we believe that in times like this, those customers and those relationships are even more important. And so we're continuing forward with our investment plans, not just in the Carolinas, but across the country.
What are the areas that, for your clients, that you find most attractive? What are the sectors that you guys like right now as you approach your corporate clients?
Well, our business model is based on having relationships with middle market, commercial, and small business customers. And we do that across a wide variety of different industries. And then we support those local relationships with industry expertise. So we're not focused in on a specific industry. We're more focused on medium and small businesses and supporting their day-to-day needs.
Talk to me about the concerns that your customers are talking about and their needs and how that might have changed.
Well, going back to a previous comment, it has introduced uncertainty. Obviously, not being aware of what a product will cost or how the supply chain may be impacted causes businesses to stop and consider. And we're seeing changes almost every day, and businesses are figuring it out, and they're talking to their own suppliers, and that's clearly leads to uncertainty. So as these decisions are made, as things become more clear, we believe businesses will continue and resume any investment that's been delayed.
So, you know, a lot of folks are concerned that with tariffs, it's kind of the small, mid-sized businesses that might be impacted the most, the inability to take cost increases and pass them through to customers, unlike, say, a Walmart or something. Is that what you're hearing from your customers?
Well, I don't think they know at this point. Clearly, this is a time for us to be closer to customers and be able to support them regardless of the economic scenario. And we believe that we're well positioned to do this, but I don't think they know at this point. Everyone or every business certainly is impacted and supply chains are impacted, and we want to be there to support them as they make decisions day to day. But at this point, it's a little bit early to know that.
There was a lot of deposit competition for savings that seemed to then hit the pause button. Where are we in deposit beta, and how do you stay competitive?
Well, we're very, very fortunate that we have a very granular deposit base. In fact, if you look at the percentage of deposits that we have that are FDIC insured, it's the highest in our peer group. And that deposit base has been quite stable for us. In fact, we've been able to grow it at a period of time when others have not been successful. So we're continuing to see that same trend. We've been very successful at continuing to grow the deposit portfolio. Obviously, as rates come down, interest expense and the cost of that deposit book has come down. And we will continue to monitor that closely. But it is the deposit environment has been competitive for some period of time. And I would say there hasn't been dramatic changes in the last number of months.
All right, Brent, thank you so much. We appreciate it. Brent Stanbridge, he is president, Consumer and Business Banking at Huntington Bank, located in Columbus, Ohio. That is the bank of Mr. Matthew Miller. So how about that? Talk about a granular depositor right there. So we'd like to speak to some of these bankers at the mid-market banks to get a sense of kind of how the corporate and mid-size and middle market companies are behaving, and are they investing? How are they investing? So those bankers give us a good view there. Looking at the markets here, again, continued strength out there, riding the wave of perhaps reduced tensions in the trade wars, particularly between the U.S. and China. And President Trump saying that he potentially will be speaking with President Xi later this week to maybe further some of those discussions. S&P 500 up 140 points. That's 2.5%. We'll have more coming up. This is Bloomberg.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Monday. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We got you covered with the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. And thank goodness we have them because we got a lot of news today, particularly out of the drug makers from the White House. So shares of pharmaceutical companies largely trading higher today as President Donald Trump's executive order was aimed at cutting U.S. prescription drug prices. It was sort of like the less bad news. It was better than feared. One area, though, will definitely be pharmacy benefit manager. Sam Fazeli is Bloomberg Intelligence Director of Research for Global Industries and senior pharmaceutical analyst. Sam, can you just walk me through why do we here in the U.S. pay more for drug pricing, and should that be reduced?
Yeah, so Alex, the thing in the U.S. is that it's a price that's set by negotiation between pharma companies and insurers, pharmacy benefit managers, and payers. It's not dictated by the government. At least it wasn't until recently. Whereas in Europe and many other countries, you have a single payer, and that's the government, and they play hardball. So they can get lower prices because that's the way they operate. And there are many situations where in the UK, the National Institute for Clinical Excellence refuses to believe or accept that a drug has got is value added, so it's not even offered, even at the negotiated lower price. So that's the issue here, which means that as soon as innovation happens, it's out in the market in the US. The day that a product is approved, they can get on and sell it. Over in Europe, it could take a year, 2 years for a drug to come through. So, and maybe with this new executive order, sometimes the companies will go, well, I'd rather not launch in Europe.
So is it realistic to expect that drug prices in the U.S. will come down, could come down?
See, the thing is, Paul, I'm having a tough time balancing this out. If the intention is to get the rest of the world to pay more, which of course helps the pharma companies, then I don't see how that helps the U.S. drug prices come down, right? If they aren't able to increase prices in Europe, then the government in the US is saying, well, you should give us the same prices you're giving elsewhere. Then innovation disappears, because at the end of the day, if you cut your revenue by half, you won't have, you spend 15% of that on R&D, guess what? Your R&D falls. Simple maths. So how this plays out would be quite interesting to see. And of course, we have to also remember that there isn't a price in Europe. So we just checked the price of Wegovy in the UK at the effective dose, $230, okay? In the US, Novo sells it for $499 to the direct-to-consumer. Okay, it's about twice as much, okay? So let's say in Europe it goes up to $300 or in the UK. How does that change with the US number? And we don't even know whether the company actually gives that price, because then there's a little small print. We have been doing the NHS has done a commercial deal. So what is the price? How is the US government going to find that price? Unless they incorporate it into the trade agreements that they're doing, which is what should be happening here.
So what about the PBMs? So that was singled out, the pharmacy benefit managers, as sort of the middlemen between insurers and the government and the drug makers, et cetera. What role do they really have, and are they the ones most at risk?
I would say they are the ones most at risk. I would say they should have always been the ones most at risk, because I don't understand the reason they exist in the middle. I mean, that's I can show you a chart of how the U.S. payment system works, and it varies by insurer. You can go from one job to another, and the cost of your drug goes up, right? Because you have a different insurance, or from one state to another. So that just really is untenable. And it's nice to see that the government, the administration, is now talking about making it easier to sell directly to consumers. So let me give you an example. We have data on the terminal that gives you an ability to calculate what a drug revenue should have been in the past quarter. Volume times price, right? Then you go and see what they actually reported. Sometimes for insulins, for instance, is 80% lower. 80%. Now, the PBM say, oh, no, we pass that on back to Medicare Part D. Why do you even take it? Why do we need to pay an administrator in the middle here?
That's a great question.
What are your companies within your food chain there in a big pharma? What are they saying? Because this issue is new. We've been complaining about high drug prices forever. What are they saying as to what is likely to really happen?
They're not saying very much, Paul. And in these sort of circumstances, the best thing to do is to keep your head down and see how things work out. And of course, today it's only just come out. So I think they all, to a T, say the PBMs are a problem. We need to get rid of them. That's what, let's say that. But that's not today. That's been going on for 10 years. They also say Europe should pay more. But they also say that when you do the net price calculation, in many instances, I actually sent you a quote from Pascal Soriot, the AstraZeneca CEO, saying that actually in many cases the prices end up being about the same, maybe a little bit different. So all of that needs to be taken into account, and we need to decide if they're going to push Europe higher to pay more. Is the US also happy to move some of the R&D to Europe? Maybe that's something that the European governments will ask for. Fine, we'll pay more, but bring some of your R&D here. Right. Bring more manufacturing here. Same arguments.
So, 20 seconds. The drug stocks are higher. Does this make sense to you?
Yeah, but as you said, you got it right at the beginning, Alex, that this is not as bad as people expected. And also, I think we're in a world where Sometimes the president uses his power to really push people into action, and then when he gets what he wants, the action isn't as bad as.
All right.
Yeah.
Sam, thanks a lot. Sam Fazeli, Bloomberg Intelligence. We really appreciate you. For our listeners in the U.S., here's a reminder. You can listen to us via satellite radio on Sirius XM, channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on Sirius XM, channel 121 is presented by ShipStation. Stay with us. Your top stories and global business headlines are coming up right now. Happy Monday, everybody. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
There's a trade truce between the U.S. and China, and markets rejoice. Welcome to Balance of Power. I'm Kaylee Lyons in Washington alongside Bloomberg's Michael Shepard. Today, Joe Matthew as off as we contend with a whole host of news. Of course, primarily the U.S. and China after talks in Geneva agreeing to lower the tariff rate placed on each other's goods to 30% and 10%, respectively. We'll get the details with Bloomberg's Tyler Pendle, plus discuss the economic impact with Anna Wong, our chief U.S. economist here at Bloomberg Economics. Plus, there is a whole bunch of geopolitical news we need to follow, as well as President Trump right now is en route to the Middle East against the backdrop of the last American hostage being released by Hamas. We'll have those details, plus the prospect of direct talks between Ukraine and Russia happening in Turkey on Thursday. Bloomberg's Nick Wadhams will bring us more, and our political panel will be here too. Rick Davis and Jeannie Shanzano weigh in on the budget reconciliation battle, which is supposed to move forward substantially in Congress this week with a SALT cap lift potentially to just $30,000. All of that is ahead. It's a lot to get to this hour, but let's begin with the relief rally that is currently underway and check in on the markets with Charlie Pellet up in New York. Hey, Charlie.
Thank you very much. And here's what's going on. Kaylee Lyons, we have got the Dow, the S&P, NASDAQ all surging. Big time rally on this back to work Monday. Right to the numbers here, fast moving markets, and we've got you covered with the S&P up 145 now, up 2.6%. Dow Industrials surging 900 points, up 2.2%. The NASDAQ Composite Index up 638. That is a gain of 3.6%. The NASDAQ 100 Index now in a bull market, up 3.2%, highest level since March 3rd. Russell 2000 Index surging as well, all part of a broad-based rally today. That index up now by 2.9%. And the Bloomberg Mag 7 Index is surging 4.8%. The 10-year 4.43%. The 2-year 3.97%. Gold down $90 the ounce, retreating by 2.7%. And West Texas Intermediate crude up 2%, $62.28 a barrel. Lots of optimism about the U.S.-China trade reprieve, leading to that stock market rally and a decline in defensive assets like bonds, gold, and haven currencies. Among the tech names surging on the China tariff news is Tesla, up now by almost 7%. And it does raise the question, where's Elon Musk these days? Dan Ives is global head of technology research at Wedbush Securities. He was interviewed on Bloomberg Surveillance.
Thankfully, not in the White House, not Mar-a-Lago, in the factories, and what I believe is now driving the autonomous strategy for Austin in June. And that, look, it speaks to why Tesla's up, right? I mean, you need your leader back. They got their biggest asset back. And I think it's going to be viewed as a pivotal moment for the Tesla story.
Dan Ives of Wedbush. Indeed, Tesla up now by 7%. Among other tech names, Apple up now by 5.1%. So again, recapping the Dow, the S&P, NASDAQ, a major relief rally underway. Balance of Power continues now. And back we go to Washington. Once again, your hosts, Michael Shepard and Kaylee Lyons.
All right, Charlie Pellet, thank you very much indeed. Markets obviously like what they heard out of Geneva and the White House today, as the U.S. has confirmed that progress was made in talks with China and Switzerland over the weekend. In fact, tariffs going much lower than perhaps initially anticipated. Remember, at the end of last week, President Trump was talking about an 80% tariff on China seeming right, Mike, and instead what we get is the U.S. taking from 145% all the way down to 30%, and China goes from 125 to 10.
And that's with the prospect of going even lower if the fentanyl tariffs are removed or reduced, if there's some sort of sign of progress there with China. So there was a lot left open there, and they even left open the prospect of extending this 90-day pause. Yeah. We can't quite call it a deal, but it certainly is, as you put it, a truce or a moment of détente in this confrontation over trade with the world's second largest economy.
Yeah, and of course, President Trump took his moment to tout this truce, if that's what we want to go with here. He spoke from the White House earlier today.
In addition, yesterday we achieved a total reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue on the largest structural issues. The relationship is very, very good. I'll speak to President Xi maybe at the end of the week. We have some other things we're doing.
A total reset is how the president describes this. So let's get more from the White House, where we find Bloomberg's Tyler Kendall on this Monday. But Tyler, to Mike's point, this isn't yet a deal. We're still going to be negotiating in this 90-day window. So this reset is not yet final.
Right, exactly, Kaylee. While it is a de-escalation to give the sides time to negotiate, at the end of the day, we're going to have to see how long that lasts and if both sides can agree on a finalized trade deal. Because once Wednesday rolls around, that 90-day pause goes into effect, and then from there, the countdown clock really is on. Now, Treasury Secretary Scott Bessent was asked earlier today, what would it take to keep tensions low after that 90 days? He said ultimately it would be good dialogue in good faith, but did confirm to Bloomberg Television that at this point it is implausible that tariffs would drop below that floor of 10%. Importantly, both sides here are really trying to highlight that they have created what they have called a mechanism to keep talks going. And as you're about to hear, the Treasury Secretary told Bloomberg TV that this is going to be important for negotiations going forward.
China was the only country who escalated their tariffs in response to our reciprocal tariff level. So that resulted in an unfortunate escalation. So we now have a mechanism to deal with that. Neither side wants a generalized decoupling. The U.S. is going to do a strategic decoupling.
That reminds us that there's still a lot of negotiations to have and some big differences on the table. A few different threads that we're watching here, Kaylee and Mike, one including purchase agreements going forward. Both the Treasury Secretary and the President today said that the Phase 1 China deal could be used as a template. So we're going to be watching when it comes to U.S. ag imports into China. If that could make its way into any sort of purchase agreements and what sort of enforcement mechanisms would look like. The second, of course, is fentanyl. As Mike had mentioned, that 20% of that 30% tariff is tied directly to the United States fentanyl concerns. President Trump said that he believes China will act in good faith on curbing fentanyl flows and the ingredients used to make the drugs into the United States amid allegations that they are contributing to the drug trafficking. And then, of course, lastly are those non-tariff barriers that we're watching very closely. China did confirm earlier today that they're going to remove non-tariff countermeasures. We have taken that to mean that they are expected to suspend or lift some of those heightened export controls on critical minerals that came since April 2nd. We're going to have to see how these negotiations shake out. President Trump did say earlier today he could hold a call with Chinese President Xi Jinping as soon as this week.
All right. Wonder where that's going to fit in the schedule as he has a busy few days in the Middle East ahead of him. Bloomberg's Tyler Kendall, thank you so much. And we want to take a look through the economic lens of what difference these tariff changes really will make between the U.S. and China, and turn to Anna Wong. She's our chief U.S. economist at Bloomberg Economics and is here with Mike and I in our Washington, D.C. studio. So, Anna, obviously 30% is a whole lot lower than 145%. But I know you've been watching cargo volumes. We've seen this massive trade drop-off between the U.S. and China already. How much is going to be revived by still an incredibly high 30% tariff rate?
Yes, Kelly, actually we put out a note last Friday that showed that in fact container ships leaving China has increased in the first week of May, and we connected the dots. We think that several of the U.S. retailers, after meeting with President Trump in late April, have resumed their order, and the ships carrying those orders potentially have already been setting sail to the U.S., arriving today, starting today, with many of those ships arriving on the 20th. And this was why we had thought that, in fact, they need to cut the tariff this week, because those ships carrying Walmart and Target goods are arriving. So if you believe that was the concerns about empty shelves was what motivated this cut, it also means that as this 90-day comes to an end, basically by mid-August, which covers the peak shipping period ahead of holiday seasons, the stakes for escalating actually would reduce, because the holiday season is assured. There won't be empty shelves, and so Trump could easily re-escalate again. And I just think that what we saw this weekend is not consistent with Trump's negotiation style, which is not a straight line down with the tariff rate. It usually comprises of escalation, and then some de-escalation, and then escalation back again until a final deal is reached.
So to what extent does this reflect a recognition on both sides, not just here in Washington, but also in Beijing, that the economic risk of carrying out this tit-for-tat economic trade war to the level it had reached was just so dangerous to the economies of both countries?
And that hits the nail on the head, exactly. And the reason why I think the U.S. and China negotiations came out and say that they found agreement very quickly is that the agreement is that they do not want the worst case scenario, which is for trade to enter the embargo state at the peak shipping season. Most of the shipping in the holiday season, which accounts for over 40% of sales revenues for any U.S. firms, happen from now to end of August. So this is a critical period that I think U.S. and China both easily found agreement on to not disrupt. But beyond that, who knows?
Well, obviously, none of us can predict the future, including Federal Reserve policymakers, hence why they keep emphasizing patience. We have seen today in the aftermath of this truce being reached, Anna, the expectations for Fed rate cuts being taken down this year. Now, I think just 55 basis points are priced in. Does this make a material difference in the amount of easing you expect us to see?
Yes. So, I mean, our base case has been for only 25 bips of rate cut this year. So we were already lower than the rest of the market. But right now, what you could immediately see is that the May's jobs report and June's jobs report would not be as bad as in the situation where container volume continued to drop. Because we're now already seeing this week container volume is rising in the port of LA, and with a lot more firms planning to front run in this 90-day reprieve period, it means that the logistics sector just would not shed as much job as we thought. So there you have May and June's payroll being not as, possibly not negative as what it could have been had, the plunge in the container ships continue.
Anna, there is a lot for the two sides to get through over the next several weeks. Is 90 days going to be enough to lock this in, given how detailed that fine print is going to be?
Not at all. Not at all, exactly. That's why I thought the 90-day reprieve is more of a holiday. Let's get through this holiday season first. Let's make sure that not a lot of small businesses are going bankrupt in the U.S. and China factories are not all going out of business. Because the U.S. and China's tariff problem, trade barriers problem goes really deep. And it takes years. Even in the phase one deal, it took a whole year. And during that year, President Trump was kind of fluctuating whether he should take it or not.
Well, to the point you were making earlier, these things tend to be a roller coaster. With this particular president, Anna Wong of Bloomberg Economics, thank you so much for joining us. And of course, we have to keep in mind that Scott Bessent, the Treasury Secretary, has said previously a full deal with China could take 2 to 3 years. So we have to keep that in mind. We'll have much more ahead here on Balance of Power as we turn to other geopolitical stories coming up next, right here on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all pushing higher. Investors optimistic about the U.S.-China trade reprieve, with the S&P now up 147. That is a gain of 2.6%. The Dow off session highs, but still up 902 points, up 2.2%, while the NASDAQ Composite Index is now up 658, up by about 3.7%. The Russell 2000 Index of small cap shares is surging now by 3%, and the Bloomberg Mag 7 Index, that is gaining by almost 5%. 10-year 4.44%, with a 2-year 3.98%. Gold down $96 the ounce. Spot gold now trading down by 2.9%. West Texas Intermediate crude up 1.8%, $62.14 a barrel. And Bitcoin right now down 1.4%, 102,850 on a Bitcoin. The sharp rebound in risk appetite driving the S&P 500 up by about 2.5% and above President Trump's so-called April 2nd Liberation Day level. Here's the president speaking earlier this morning.
Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue in the largest structural issues.
And shares of drug makers are gaining, even after President Trump said he plans to order a cut in U.S. prescription drug costs. Among those drug makers, Eli Lilly up 2.4%, Pfizer up 3.1%, Bristol Myers Squibb up 2.6%, Merck now surging by 5.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Michael Shepard and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. I'm indeed Kaylee Lyons alongside Michael Shepard here in Washington. Joe Matthew is off today. As we consider what is happening here in Washington, it's actually not where the president is going to be spending his week this week. He right now is en route to the Middle East for a three-nation visit to Saudi Arabia, the United Arab Emirates, and Qatar. And he's doing so against the backdrop of some pretty important news today that he is actually just confirmed on Truth Social, posting live, it seems, from Air Force One, as the president says the following: Adnan Alexander, the last living American hostage, is being released. Congratulations to his wonderful parents, family, and friends. And of course, he's referring, Mike, to him being the last living American hostage that was still being held by Hamas in Gaza, who now, of course, is being returned via the Red Cross.
And Trump has been trying to pressure all sides in this conflict, not only Israel, but especially Hamas, to arrange for these hostage releases. And, of course, the significance of Adnan Alexander, the last living American to be released. It is something that Donald Trump will, no doubt be celebrating, as we see here. But it does leave a lot of questions now about where things go with Gaza and with Israel.
That's right. So we want to get some answers to those questions now and turn to Bloomberg's Nick Wadhams, who covers national security for us, leads our coverage of it from here in Washington. So, Nick, obviously this is a massive moment for the United States with the last American hostage being returned, but there are still plenty being held in Gaza, living and those who are believed to be deceased. Does this deal bring us any closer to a wider deal?
My initial impression is no, it does not, and that's causing some real dyspepsia in Israel. I mean, there's a lot of confusion about the terms of the deal and how this came about. There's some suggestion, was the U.S. actually speaking with Hamas and cutting Israel out? Why did Hamas decide to do this now? It has been framed in some ways as a gesture of goodwill to the United States to try to curry some favor with Donald Trump. But that is not a position that Israel certainly wants to be in. I mean, Israel, certainly under Joe Biden, was used to the idea that the U.S. essentially channeled any conversations around Hamas through Israel. Now you have Donald Trump, who has presented himself as there's no better friend to Israel, suddenly being the one who's going around them. So there's so much confusion here in Israel about what Donald Trump is actually doing and what kind of conversations they're having with Hamas.
Let's talk about that a little bit more, Nick, because you saw before the election, during the election, and in the immediate aftermath of Donald Trump's victory, this view not only in Israel, but here too, that Trump and Benjamin Netanyahu really had this alliance. And yet we've seen now the administration forge this agreement with the Houthis to stop bombardments of U.S. Shipping traffic, and then also in outreach to Iran. But none of that really seemed to involve Israel. So where does that leave Netanyahu and Trump?
Well, I think you're seeing an Israeli government that is really off balance and trying to answer that exact question, and they'll hopefully get some answers when Trump goes to the region this week. But it is an extraordinary turn of events, because you had the president basically announce last week out of the blue that they had come to some sort of ceasefire deal with the Houthis, where the U.S. and the Houthis agreed to stop attacking each other. Didn't say anything about the Houthis and Israel. Right. And under any normal circumstance, or at least how we're sort of used to the U.S. conducting foreign policy, you would have a situation where the U.S. would only have those conversations about the Houthis in lockstep with Israel. Same with Iran. I mean, yes, there had been indirect talks between the U.S. and Iran, but I think there's a lot of concern in Israel that the Trump administration is going to be willing to do a deal and not consult Israel, and then that's going to leave them in a potentially weaker position. So there certainly a whole lot of concern from Netanyahu. You can bet he's banging on the Oval Office door trying to get some answers from Donald Trump.
Well, he won't find Trump in the Oval Office this week.
That's
Trump
right.
is visiting other nations in the Middle East. To what extent are the things we're talking about, the conflict still ongoing between Israel and Hamas, questions around Iran featuring heavily on his agenda this week? Or is this really just about money and getting investment into the United States, Nick?
Well, certainly what we've heard so far from the administration, this is really deals, deals, deals. I mean, he mentioned this $1 trillion figure for Saudi Arabia. He wants to go there. He wants a big splashy number. The UAE, they want a lot more. They want U.S. chips. They want those NVIDIA chips to help build out their own AI. They see themselves as really being on the vanguard of a push for more usage of AI from the Middle East. So there's going to be a lot of conversation about that. Whether Trump drops some restrictions on exports, we may see that. I mean, he is really going for business deals, but it's really important to remember that he sees all of these political deals and the foreign policy stuff on Iran and the Houthis as intimately tied in with that. So if you get these deals, if you get the policy deals, something on Iran's nuclear program, he's doing that, yes, because he wants that deal, but also because he wants what may come of that investment in business. That's sort of how he sees success and how he sees the terms of those.
Well, Nick, of course, as the president heads to the Mideast, there is another region that is very much on his mind, and that is Ukraine and his effort to achieve a peace agreement. We did hear from the Ukrainian President Volodymyr Zelensky today talking about this and his willingness to take part in negotiations in Turkey. Let's have a listen.
Ukraine is ready to move toward peace quickly and constructively. We accept the American proposal for a full and unconditional ceasefire. In fact, we ourselves are proposing it. Russia, as of now, is rejecting even that, even a ceasefire. And if they refuse something as basic as that, it means they don't want to end the war at all.
So, Nick, what are the odds now that we see President Donald Trump perhaps even join Vladimir Putin and Volodymyr Zelensky in Turkey later this week? We know it's a very loose situation, but what are we seeing from here?
I mean, it's just, again, just one of the sort of more head-spinning elements of how this president conducts foreign policy, where it is all in public. All of his notions, his thoughts, his ideas. He said today, as you mentioned, that he may go to Turkey to meet with them, but, Volodymyr Zelensky has said he'll be there. Vladimir Putin has not said he's going to go to Turkey for these conversations. They proposed direct talks, but it was not at all clear if he meant direct talks between him and Volodymyr Zelensky. So I think what you're seeing here is a little bit Donald Trump looking to twist Vladimir Putin's arm a little bit and say, hey, I'm willing to go. Are you willing to be there? Danger there, of course, is that Trump says he's willing to go and then Putin says he's not, and then it makes Trump look a little weak. I don't know. It's just another one of these crazy situations where you sort of see the gamesmanship, but Vladimir Putin can just say, no, forget it, and potentially then risk Trump's wrath. So we'll have to see where this one goes.
Indeed we will, and we know Nick will be on top of it for us. Bloomberg's Nick Wadhams covering all things national security from here in Washington. Thank you so much. And of course, another story we're keeping on top of here in Balance of Power is the trade truce between the U.S. and China that was struck after talks in Geneva over the weekend. Tariffs go lower, and stocks today go higher. Right now, we're up 2.6% 6% on the S&P 500, its highest level since March 5th. The NASDAQ 100 higher by more than 3 percentage points at the highest levels we've seen since February. And for more, we turn to Christina Aquino, Bloomberg Managing Editor for Markets Live, who is live from our headquarters in New York City. Christine, it's like April 2nd never even happened. My question is this recovery durable?
Yeah, Kaylee, I mean, that is the question on a lot of investors' minds at the moment, right? Because we are seeing this resurgence of the Trump trade, if you will, right? This is the expected reaction when President Donald Trump first took office. Higher stocks, higher yields, even the dollar is having a good day. But really the question is, how long can this last? Because we know from experience that trade deals take a while to hammer out. And at some point, you know, the initial headlines and the initial report of progress from the talks just isn't going to be enough for investors. They're going to want some detail. They're going to want some specifics on timing for implementation and more concrete progress. And, you know, the question is, how long is that going to last? And when that euphoria is going to run out? And maybe the answer may come in the form of some of the economic data that we're about to see and whether that shows more signs of an economic slowdown.
Christine, we're seeing a lot of the gains being led by the tech sector right now. Can you explain how that is playing out right now?
Well, Mike, yeah, you're absolutely right. We are definitely seeing a lot of those gains concentrated in technology. Remember that these are some of the most expensive stocks on the S&P 500 and the major U.S. indexes. And so when we first got kind of the drag from the trade talks and just the trade situation in general not going so well, these were the first to sell off really because of just their extremely high valuations and just the fact that a lot of investors were most exposed to them. And so they were kind of at the front lines of the sell-off. It makes a lot of sense that we're seeing them leading these gains. You're also seeing a lot of more economically sensitive sectors gaining today. Sectors that are very much exposed to that trade, international trade between U.S. and its trading partners. You know, we're talking about retailers. Those are some of the big names that are rallying today, again, because of just these receding fears that, you know, we're going to run out of goods shipping from China to the U.S. and therefore we're going to be seeing some empty shelves. A lot of those fears at the moment definitely being calmed by the progress at this week in stocks.
Well, and you alluded to some of the data we're expecting to see as well. Obviously, Christine, we get CPI tomorrow. I'm already looking at swaps pricing that indicates the Fed or the market is rethinking how much the Fed might actually ease this year. Are we likely to see yields continuing this climb higher? I'm just wondering if President Trump might be looking at it and wondering if things get queasy again.
Yeah, I mean, very good question. Definitely something that we know the administration is watching out for, that level of the 10-year yield. And, you know, yeah, we have seen that process of repricing those Fed rate cut bets. We are seeing now that we're closer to bets for just 2 rate cuts from the Federal Reserve versus 3 from just over a week ago. And, you know, that's going to be more in line with what the Fed's own forecasts are. They are expecting just 2 rate cuts this year. And so there's a little bit more alignment there between the Fed and markets. I think the question is, you know, whether we get a surprise to the upside, for instance, on inflation, or a surprise to the downside on some of the more economic indicators like retail sales, for instance. We've seen that playing out in soft data. We'll see if that plays out in hard data too.
All right, Christine Aquino, Managing Editor for Markets Live here at Bloomberg. Thank you so much for joining us on Balance of Power. And we still have much more we need to get to this hour as we turn our eyes to Congress, specifically the draft tax bill that's going to be marked up in committee. For those who care about SALT, looks like 30,000 is your number if you're married. We'll have the details next, right here on Bloomberg.
It's 1240 on Wall Street. We do check markets all day long here at Bloomberg. A major risk-on rally today, all about tariffs with the Dow, the S&P, NASDAQ surging. Investors optimistic about the U.S.-China trade reprieve. Complete coverage continuing on Bloomberg radio and television with the S&P now up 154. That is a gain of 2.7%. We've got the Dow up 954, up 2.3%. NASDAQ up 674. For NASDAQ, a gain of 3.8%. We're looking at a broad-based rally with the Russell 2000 index now higher by 3.1%. NASDAQ 100 index up 3.5%. Tech's the standout with the Bloomberg Mag 7 index surging now by 5%. Your 10-year 4.44% with the 2-year currently yielding 3.97%. Gold is retreating by $96 the ounce to $32.28, down 2.9%. West Texas Intermediate crude up 2.1%, $62.30 a barrel. And Bitcoin now lower by 1.5% at $102,760 on Bitcoin. Stocks may be up today, but President Trump's tariff policies have taken a toll, and the U.S. economy could still be heading toward a cliff, as we hear from Bloomberg's Vinny Del Giudice.
Economists surveyed by Bloomberg have put the odds of a U.S. recession in the next year at almost 50-50. For now, the weakest signals revolve around confidence in the economy stemming from tariffs, both household and business. Signs of a pullback could perhaps show up in Thursday's reports on retail sales and industrial production based on Wall Street forecasts. There's also more consumer sentiment data on tap on Friday. Vinny Del Giudice, Bloomberg Radio.
S&P Global Commodity Insight says American oil production likely will decline next year for the first time since the pandemic, as tariffs roil global trade, causing a slowdown in demand. Right now, we have got oil producers. They are trading higher. ExxonMobil up 1.4%. ADRs of BP, they're up 1.2%. Chevron up by 1.7%. Again, recapping here, the Dow, the S&P, NASDAQ, all surging. S&P up now by 2.8%. Balance of power continues right now. Back we go to Washington. Once again, your hosts, Michael Shepard and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. I'm Kaylee Lyons alongside Mike Shepard here in Washington. Joe Matthew is off today, and as Charlie was just running us through, obviously the markets are taking what it perceives to be good news on tariffs between the U.S. and China and running with it. But we want to talk about the other aspect of the president's economic policy, because the White House has long argued it's not just about the tariffs. You have to wait for part two, which is the massive tax cuts package he's hoping will work its way through Congress in relatively short order. And that's what the House is working on this week, as two key committees are getting ready tomorrow to mark up their portion of this massive legislation. The Energy and Commerce Committee, which is where the Medicaid changes come in, and of course the Ways and Means Committee, which is tasked with the big tax package. And we're starting to get some details as to what exactly is in that thing. And keeping our Bloomberg audience in mind, what we're going to lead with here is the SALT cap. It's currently $10,000, Mike Shepard. Apparently, according to our reporting, it's getting lifted to $15,000 for an individual, $30,000 for married couples, and there's a cap. You only get it if you make $400,000 or less. The thing is, that might not be enough for a lot of those SALT caucus members.
It is aimed at those SALT caucus members in states like New York, New Jersey, and California, Republicans who would otherwise vote for another big tax package, the big, beautiful bill that Donald Trump is pushing, but they have a price. They want to see that SALT tax cap lifted much higher than $30,000. It won't be enough to sell back home to their constituents based on everything else that's in the bill right now.
Yeah, and keeping in mind, if they just allow the 2017 tax cuts to expire at the end of the year, there is no cap on the state and local tax deduction, which arguably might even be better for them. So is this doomed to fail potentially if you can't get those votes in the House? Let's turn now to our political panel with that question. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick, of course, Stonecard Capital partner and Republican strategist. Jeannie, our Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Rick, the Speaker of the House did say that things are still fluid here, so there could be some changes. Obviously, the markup may provide an opportunity for that. But if the number is to be 30,000, does this thing risk failing on the House floor ultimately?
You know, I doubt it. It'll be all part of a broader agreement amongst all these folks. They are desperate to find revenue someplace. The pinch is on to, not run up the deficit. And so any release, any increase in that cap that goes with SALT, it cuts against all the cuts they're trying to make to things like Medicaid and other programs. And so the reality is there's just very little give. The CBO had a weekend score of this thing costing over $5 trillion. That's half a $500 billion more than they anticipated. Now, it was before the bill came out, but this is really going to be a pinch. I mean, you can only imagine the pressure to pass this bill. Otherwise, you'll have the largest tax increase in American history go into effect. And you may not be able to sell the SALT bill, but you certainly aren't going to sell all those rates going back to their original level, even with a full SALT deduction in New York, California, and other big states.
Well, Jeannie, when we look at this package, we also have to keep in mind that there are a number of House conservatives who've expressed concern that if there aren't enough cuts elsewhere, that they may not be able to vote for all these tax cuts in full. Where are they finding them? Are they going to be able to find them perhaps in Medicaid? That seems to be a third rail even for a number of Republicans.
Yeah, that's the $24 million question, Mike. And we saw the op-ed out today in the New York Times where you heard from the Missouri Republican who said this is neither good politics nor, quite frankly, is it good for the Republican Party or is it good for Americans overall to go after Medicaid, Medicare. And of course, the president has promised not to, but just as Rick talked about, where then do you find this money? And I think, the entire issue of SALT, everybody, Mike, knows that SALT is one of my favorites. When you look at that issue, you see the local politics at play here. We've now got, in my district, we've got a Lawler in a very, very difficult district who has been very strong on SALT. And then he wants to potentially run for governor against, guess who? Elise Stefanik, who has not been as strong on SALT, but the other day she came out roaring. And that's so fascinating because she's also part of leadership. So you see the local politics at play here. It is really a non-starter in states like New York, New Jersey, California, not to lift this SALT cap. And to Kaylee's point, they don't have to do anything because January 1st it goes away. And that's giving these blue state Republicans an awful lot of power. And of course, Mike Johnson, a huge headache.
Jeannie, we talked about the blue state Republicans and the dilemma that they are facing. But what about some of the red state Republicans when it comes to Medicaid specifically and the challenges that they face there? Are we seeing a different, more populist tone from people like Josh Hawley, for instance?
We absolutely are, which is fascinating that we're talking just at the moment, a few minutes after Donald Trump has taken a page out of the populist playbook of the Democrats in terms of price caps on prescription drugs. So you're seeing this throughout this more MAGA wing of the Republican Party, and Josh Hawley's op-ed is a good example of that. There is a deep division in the Republican Party between the MAGA populist folks and the more traditional Republicans, and both the issue of Medicare, Medicaid, those cuts, and also prescription drug price capping are really good examples of that.
Well, if we want to quote the senator directly, what Josh Hawley wrote in this op-ed, Rick, in part reads, The wing of the party wants Republicans to build our big, beautiful bill around slashing health insurance for the working poor. That argument is both morally wrong and politically suicidal. When we consider the Congressional Budget Office says that these policies in the bill, if adopted, will kick 13.7 million people off of Medicaid rolls in the next 10 years, I wonder what that means for just the next year, how problematic this could be in 2026.
Yeah, look, Josh Hawley was one of the very first people to declare openly that the Republican Party is now the working class party, multicultural party, and he's following this up with a very, very clear argument, which is our votes are now working class voters in rural areas, and they are living off of Medicaid to a large degree. 1 in 6 Republicans are on Medicaid, and in his state, it's a higher percentage even than that. And so he's just declaring the obvious, that if we expect these people to turn out for us, we have to change our attitude about these social programs that Republicans historically have always disdained. And he's calling out the corporate elite Republicans that made up a good portion of the party in the 80s and 90s to say you're over and this is the new party and we need to get right. The problem is they also have a big issue of payments for that House bill. That big, beautiful bill is expensive, and targeting $880 billion of cuts in Medicaid are exactly what Josh Hawley's most worried about. And I don't think there's a way to square that circle. I think that the reality of it is Republicans are going to torch themselves if they're not careful by making cuts to the exact people who vote for them in state, local, and federal elections.
Rick, to follow, does this mean perhaps that some of the other priorities that we saw the president spell out for the bill, such as cuts in taxes on Social Security benefits and on tips, will those go by the wayside? Are we at risk of seeing that happen?
The reality is that I think this debate is coming down to how much debt do you want to put on this bill. I mean, everybody's talking about trying to make it at least budget neutral, if not creating savings to the deficit. And there's no way in the scores that we see today and the bill that was released this morning that you're going to be able to do that, have everything you want, including like what you were mentioning, Mike, the tax on tips, the no tax on Social Security earnings and things like that. Adding those to the 2017 cuts, the burden is going to be so heavy to carry that there's no way that the Senate is going to approve a bill that does those kinds of deep cuts. And so you're just going to run up the tally in the deficit again. And that is another political problem that midterm Republicans, regardless of what state you're from, are going to have a hard time explaining.
Well, President Trump may be trying to find other ways to address the problem of entitlements, of required spending through those programs, Jeannie, and the ultimate deficit impact as he looks at drug prices today, signing an executive order essentially trying to bring the prices for pharmaceuticals paid in other countries closer to the U.S., which tends to pay a lot more for these kind of things. If it sounds familiar, it's because he also tried to do this during his first term as president. But is this actually good politics, bringing the cost of drugs lower, Jeannie? That is, if he can actually get this thing pulled off?
Yeah, and it's a big bit if. He has one problem, which is power. He doesn't, as far as I can see, have the power to do what he is proposing to do legally or constitutionally. There is a way to do this. It's the way the Biden administration did this through purchasing on Medicare and Medicaid. He doesn't talk about that. But on the politics end, it is good politics for him, again, exacerbating this divide that we've been talking about between the sort of Steve Bannon populist wing of the MAGA party and the more plutocrats, the Elon Musks of the world. And how do you bridge that divide? So this is good politics for Donald Trump, for his base. But from a policy perspective, it's questionable as well, because what does this do then to research and development? There was a RAND study out not that long ago, which said this would have enormously negative impacts on life expectancy for the future generations, our children and grandchildren. So, you know, there are so many implications, but Donald Trump doesn't want to have those difficult conversations. So he's going with the populist agenda, which sells big, but may not even be workable legally or good policy.
Well, and now, Rick, that brings up the question. It is good politics, but is it good policy? Will it work? He struck out in his first term. It was turned down by a judge. Are we going to see a repeat of that this time?
Yeah, no reason not to. I mean, Jeannie and I used to be frustrated by Joe Biden not using the bully pulpit to try and drive social progress. And of course, lowering drug prices is right in the square in that. So kudos to Trump for calling out the prescription drug companies for not charging American consumers what European consumers get for the same drug. I remember in the McCain campaigns, we'd go to New Hampshire and people would show up with baggies of drugs saying, you know, we get these in Canada because we can't afford the prices in New Hampshire. That hasn't changed much. And so it is a bit of a rebellion in the hinterlands of America that we're supporting the research and development that cures the problems around the world. Why don't we get a break? I think Trump is tapping into that, and it's a powerful concept. Even if he does nothing but make speeches about it, it's going to keep the heat on the drug companies.
All right, Rick Davis and Jeannie Shanzano, our political panel on this Monday. Thank you both so much for joining us. And of course, Rick and Jeannie will be back for more in the next hour of Balance of Power as we continue to focus not just on this EO and the actions of Congress, but geopolitics as well, from Ukraine and Russia to the Middle East, where we've just gotten confirmation from the Israeli Defense Forces that the last living American hostage, Adon Alexander, has indeed crossed the border into Israel after being released by Hamas earlier today. We'll have more on that story and, of course, where we stand on U.S.-China trade coming up right here on Balance of Power on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The U.S. and China bring tariffs down and stocks go right up. Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons in Washington alongside Bloomberg's Michael Shepard. Joe Matthew is off today. After weekend talks in Geneva, the U.S. and China have taken the rates of tariffs charged on each other down to 30% and 10% respectively. We'll have the details with Bloomberg's Tyler Kendall and get analysis from Sam Sachs, a professor at Yale, this hour. Plus, we have to cover geopolitics as well. The last living American hostage just released by Hamas from Gaza right as President Trump heads to the Middle East and floats the idea of making a trip to Turkey, where Ukraine and Russia peace talks could happen later on this week. And of course, we have to cover the latest in Congress as well as we get details on what exactly is going to be in this massive spending cut and tax cut package in budget reconciliation. Former House Financial Services Committee Chair Patrick McHenry will join us this hour. But we have to begin with the relief rally underway on those U.S. and China tariff headlines. And Charlie Pellet is keeping track of the movement from New York. Hey, Charlie.
Indeed. Thank you very much, Kayla Lyons. I got you covered with the Dow, the S&P, NASDAQ all pushing higher. And right now we have got the S&P 500 index trading right around, very close to the best level of the session. Stocks are powering a global risk rally on that U.S.-China truce. The S&P up 167 now. That's an advance of almost 3%. The Dow up 1,035 points, higher by 2.5%. The NASDAQ Composite Index up 715, now up by 4%. The Russell 2000 Index of small cap shares up 3.4%. And the Bloomberg Mag 7 Index now up by 5.2%. Bottom line here, stocks trading like the Liberation Day shock never happened. 10-year yield 4.44%. The 2-year 3.97%. Spot gold is down 3% now, $32.23 the ounce. And West Texas Intermediate crude oil up 2%, $62.22 a barrel. So the Dow, the S&P, NASDAQ all pushing higher. Techs among the standouts. Apple up 5.6%. NVIDIA now up by 5%. And Tesla moving higher by 6.6%. Again, recapping, stocks rally, S&P up by 3%. Balance of Power continues right now. And back we go to Washington. Once again, your hosts, Mike Shepard and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Wall Street clearly liking what it heard from Geneva, Switzerland, and then again from here in Washington as we heard President Trump talking about the progress made between the U.S. and China. Maybe don't call it a deal, Mike Shepard. Maybe just call it a truce for a temporary period of time. It's a 90-day window in which tariffs go from 145% down to 30% in the case of what the U.S. charges on Chinese goods. For China, goes from 125 down to 10. Still, though, higher than it was before this whole thing kicked off.
Higher than it was before President Trump took office, and it's certainly higher than many investors and businesses certainly were hoping for. But nonetheless, they did see some glimmers of hope there, and in particular when it comes to what they were saying about the tariffs over fentanyl. Because if China is able to demonstrate enough progress and reach a deal in some of the other areas, that would bring the floor all the way down to 10%. And that's what we saw negotiated with the United Kingdom just last week.
Yeah, a very good point. It doesn't seem like anyone realistically has a great chance of getting below 10%.
It seems to be the new floor globally.
Yeah.
But I guess up for negotiation like everything else with this administration.
Yeah, well, and if we have an understanding of the floor, perhaps we also have an understanding of the ceiling, because everybody said that 145% where we stood before on China wasn't going to go any higher than that. Of course, we did hear from President Trump about this earlier today as he spoke from the White House before leaving on his trip to the Middle East. This is how he characterized the progress made between the world's two largest economies.
In addition, yesterday we achieved a total reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue in the largest structural issues. The relationship is very, very good. I'll speak to President Xi maybe at the end of the week. We have some other things we're doing.
So we want to get more details from the White House now and turn to Bloomberg Washington correspondent Tyler Kendall, who is live from the North Lawn here on Bloomberg TV and radio. Obviously, Tyler, there was mixed expectations going into the talks in Geneva, but the White House clearly is trying to paint this as a success, even if some are characterizing it as capitulation from this administration.
Yeah, hey, Kelly, definitely a positive tone being struck by this administration. You heard President Trump there saying that even he could potentially have a call with the Chinese president by the end of this week. We should say there has not been a confirmation of that or a readout from Beijing's side on that possibility. But it does go to show how both sides here are really trying to take that de-escalation in a bid for a longer and more firm trade deal down the road. In fact, the Treasury Secretary Scott Bessent was on Bloomberg television earlier today, and he said that they have established a mechanism to continue talks, which just reminds us there's still a lot of negotiations to be had.
China was the only country who escalated their tariffs in response to our reciprocal tariff level. So that resulted in an unfortunate escalation. So we now have a mechanism to deal with that. Neither side wants a generalized decoupling. The U.S. is going to do a strategic decoupling.
So Scott Bessent there talking about some of the threads that we could see as we move forward, including decoupling when it comes to strategic industries like pharmaceuticals and chips. There's a few other angles that we're watching here. One, importantly, is what purchase agreements could look like. This administration has said that the Phase 1 China deal could be a template moving forward here. That's why we're going to be watching closely U.S. agricultural imports and what sort of enforcement mechanisms this White House may be weighing as they look to boost those obligations from China. The second, of course, is fentanyl. We heard President Trump earlier today saying that he believes China will make good on its word to crack down on flows coming out of the country. And the last one, of course, is those non-tariff barriers that this White House talks a lot about. President Trump says that he had received a commitment from China, and we did actually hear from them earlier today that they were going to reverse or remove some of their non-tariff countermeasures. It is our understanding that that very likely applies to lifting some of those export controls when it comes to critical minerals that have been applied since April 2nd. Now, Kaylee and Mike, of course, we're watching closely here how these negotiations go. The Treasury Secretary did tell Bloomberg Television that that 10% levy is the floor. It's implausible that it's going to go below that.
Bloomberg's Tyler Kendall from the White House. Thank you very much. And now we'll go to New York to our colleague Romaine Bostick for a little bit more on this rally that we are seeing across Wall Street in so many different categories. Romaine, thank you for joining us. Are investors perhaps reading a little bit too much into what was discussed over the weekend between the U.S. and China, given that there is still so much fine print to write and agree on?
To a certain extent, I think there's two sides to this, Mike. I mean, there is the idea that this is still going to be a very long process to get to an actual concrete deal with actual sort of concrete potential benefits for both our country and theirs. But you have to understand, too, this is a market that had really priced in the worst case scenarios. They were pricing in 145% tariffs on China. They were pricing in 30, 40, 50% tariffs on some of the other nations. And now we're at least back to some sort of baseline, at least if you believe what the president has said, as well as what Scott Bessent said earlier today on Bloomberg Television, that there is now a bit of a floor, and it's a floor that, at least in the minds of a lot of traders right now, Mike, they think they can live with. So whether that's a 10% baseline tariff and maybe a little bit something extra on top of that, that at least in the case of China, gets us to 30%. There's a sense that at least some of the bigger companies that are in the S&P 500 and in some of the other major indices, that they can actually weather that, and that maybe that's justification for the rally.
Well, my question, Romaine, is when this rally takes more into account the implications potentially for monetary policy, or not as much easing as was anticipated if tariffs remained high. I would note what we heard, though, from Adriana Kugler, the Fed governor, who suggested, look, this is still likely to result in slower growth and higher inflation even at these levels. Could we see stagflation still either way, just maybe not quite as pronounced?
Yeah, the comments that Kugler made earlier today were, I think, really sort of telling, right? This is a Fed that, of course, has said that it wants to wait until it sees the effect of inflation to do anything. But her speech and the comments that she gave were very blunt. Basically, the idea that what affects the economy isn't always just the hard data. She was getting at the idea that just the fear and the uncertainty does create a bit of stasis in corporate America, which, of course, can have a trickle effect down to the labor market and, of course, to consumer spending. And as a result, that she was being on guard. And those comments really weren't that far out of line with what we've heard from other Fed members as well. So this is a Fed that I think, at the minimum, is still going to be on the sidelines, but is certainly sort of guarding for a more downside scenario, definitely a much more of a downside scenario than what we're seeing in the pricing in the market right now, which is an S&P up 3% on the day, if you can believe it, Kaylee Lines.
Yeah, almost 4 full percentage points on the NASDAQ 100. Bloomberg's Romaine Bostic live in New York for us. Thank you so much. Of course, all of that being driven by the headlines out of the U.S. and China talks over the weekend. So we want to get more on that now and turn to Sam Sachs, professor of China Studies at Yale University, who is joining us on Bloomberg TV and radio. Professor Sachs, welcome to Balance of Power. When we consider how different a place we are in now compared to before these talks beginning in Geneva over the weekend, from 145% and 125% respectively down to 30 and 10%. Yes, both sides took tariffs down by an equal amount, but do you actually see this as a truce that is equal, or did China actually kind of come out the winner here?
It's too soon to know. Both sides have essentially agreed that talking is happening, and they couldn't even get that basic point straight between the two of them. We were engaged in this long game of chicken where Trump was insisting that she wanted a deal, and she didn't want to look weak, potentially facing a President Zelensky moment in the White House. So the fact that they have agreed to announce that talks are beginning itself is a stabilizing factor, but it tells us nothing about what the nature of any agreement actually will look like.
Professor Sachs, what is the significance of the two sides actually putting together a joint statement? There is a lot of optics in every trade negotiation, of course, but with China, the optics count even more. What do you make of this after just 2 days of discussions between the two sides?
Both sides want a deal. That's the bottom line. And I think it's coming from a place of political and economic weakness in both countries. What the joint statement says so far doesn't actually tell us anything. By and large, the statements are identical in Chinese and English, with the exception of some word choicing. I think whether or not they can get to a joint public agreement, once we get into the really hard issues, like what would a purchase agreement look like? What does fentanyl cooperation entail? The Chinese side desperately wants the U.S. to lift export controls. I don't see that happening. The U.S. side desperately wants the Chinese to undertake deep reforms in its economy. I don't see that happening. So once we get to the harder part of the negotiation, I think having this kind of joint communique is going to be increasingly difficult and could actually stall out altogether, depending on what happens.
Well, as you talk, Professor, about what the U.S. wants to see in terms of changes really to the structure of the Chinese economy, and this isn't unique to the Trump administration. The Biden administration under Treasury Secretary Janet Yellen talked about this plenty as well, concern over China's manufacturing overcapacity and the idea that it's flooding the market globally with cheap goods. What incentive does China have to actually change that practice? Can the U.S. really force that?
The incentive is going to have to come from internal sources. And something that often happens is you'll have interlocutors in China will use outside pressure from the U.S. to force changes to the domestic economy that politically wouldn't be possible without an external, U.S. forcing event, but it needs to come from the inside. So one thing we know about the lead of the Chinese delegation right now, the Vice Premier He, he's less of a reformer than the interlocutor for the first round of talks, Liu He. And so this is someone who's a staunch advocate of a state-led economy, not of more market liberalizations. And so I think that's going to be another factor that's going to make these kind of deep reforms more challenging. But we have to remember, Xi Jinping is under tremendous pressure right now in terms of Chinese jobs, Chinese businesses in the private sector. And so this is going to be something that's going to get them to the negotiating table, not necessarily because the U.S. is compelling them to. It has to come from within.
Professor Sachs, one thing that came up this morning during our conversation with Scott Bessent, the Treasury Secretary, was a new baseline, perhaps, for tariffs. And we'll have a listen to this, and I'd like to follow up with a question about it afterward. Let's bring him in.
Are you saying that tariff rates will only go up from here if this really is a floor of 10% on the Chinese side and 30% on the U.S. side?
I'm not saying that they're going to go up, but it would be implausible that they would go below 10.
Professor Sachs, how does this reset the U.S.-China trade relationship when it comes to tariffs, if we're talking now about a baseline that could perhaps go a little bit higher?
You know, we don't really know yet. I think they're just trying to send a signal to consumers, to voters, to U.S. stock markets on the Trump administration side. Today, the stock market rally was a huge political win, and Trump wants to take credit for that. So I think that's what this baseline signaling is really about. But until, again,